Distinguished participants, ladies and gentlemen, Kusu Sangpola, Nima Delay. Good afternoon and welcome to the conference on digital finance transformation in Bhutan, a digital future for Bhutan's capital markets. My name is Pachala. I am from Financing for Development section of Macroeconomic Policy and Financing for Development Division of ESCAP. I'll be MC to facilitate today's online meeting. The ongoing COVID-19 pandemic has caused extraordinary challenges for all countries, including Bhutan. Amid the crisis, we have seen continuous emerging of innovative technology, use of digital finance to help countries to get sufficient funds and increasing financing to the economy. The meeting today, we want to enhance knowledge on how to formulate proper policies on digital finance transformation, as well as knowledge on digitalization in capital market, including a proposed solution and implementation roadmap of digital bond tokenization. Before we start, may I kindly ask all to mute your microphone when you are not speaking. Let's begin with opening session. I would like to invite Ms. Tiantip Supanit, Chief of Financing for Development section, to give opening remarks. Ms. Tiantip, over to you for opening remarks, please.
Thank you, Pachara, and good afternoon to you all. Mr. Dorjit Pancho, Chief Executive Officer, Royal Securities Exchange of Bhutan. Mr. Scott Stanley, Development Coordination Officer, Resident Coordinator's Office, United Nations, Bhutan. Distinguished experts and participants, ladies and gentlemen, on behalf of ESCAP, I am pleased to welcome you all to this virtual conference on digital finance transformation in Bhutan, a digital future for Bhutan's capital markets. I would like to begin by expressing my utmost gratitude to the Royal Government of Bhutan and Royal Securities Exchange of Bhutan for their strong collaboration with ESCAP and for co-hosting this virtual meeting with us today. I also appreciate all participants present at this important conference during this difficult time. Distinguished participants, ladies and gentlemen, the COVID-19 pandemic has brought a new set of challenges for the world. According to the latest forecast, the global economy will likely contract by over 5% in 2020 due to the impact of COVID-19. The deepest global recession in 8 decades is sending hundreds of millions into poverty, and recovery will be very far off. However, the unprecedented social and economic crisis caused by the pandemic has put a spotlight on the role of digital finance in providing relief for millions around the world. The present crisis has encouraged incentives to embrace the disruptive innovations such as blockchains, digital currencies, big data, and peer-to-peer lending, enabled by digital technologies and new business models for inclusive and sustainable development in the region. I'd like to say that Bhutan's financial sector has grown significantly over the last few years and has made substantial progress in terms of financial viability, profitability, and competitiveness. However, a large segment of the population, especially the poor in rural areas, has been overlooked. As of 2018, while 64% of urban adults in Bhutan had a savings bank account, only 30% of the rural adults had the access to banking services. For women, account penetration is even lower with 28% compared with average 50% in developing economies. Moreover, given the mountainous geographic feature in Bhutan, in rural areas, 81% of banked adults require more than 1 hour to reach the banks. Under the present conditions in Bhutan, digital finance is expected to play an immense role in embracing financial inclusion and promoting gender equality. According to Bhutan's National Financial Inclusion Strategy 2018 to 2023, the digital finance transformation has been one of the development priorities to address the issue of financial exclusion well before the global pandemic outbreak. So now, digital finance becomes even more critical for both short-term and long-term response for a better and sustainable recovery. Ladies and gentlemen, Bhutan has launched a series of e-services and cashless transaction systems to develop digital finance infrastructure and made tremendous progress towards a digital society. Alongside these, the high rate in both network coverage and mobile connection in Bhutan has also helped further the enabling environment in the digitalization of the economy. The present direction strongly suggests that time is right for Bhutan to leapfrog the developed world to turbocharge the future development of the nation while being one of the first movers to adapt the latest digital technologies and address the next digital finance trends. As part of ESCAP's ongoing efforts to help member states build and reinforce financing capacity, Financing for Development team at ESCAP has been working on strengthening Bhutan's capital market since 2017 from various angles. In September this year, we are very pleased that with the royal government's commitment to develop the capital market further, Bhutan has successfully issued its first ever sovereign bond with more than 300% oversubscription. This is a positive result, and it's not only a monumental step in enhancing Bhutan's financing option, but also demonstrated how a capital market can be created and functional in a small economy with the right mindset and policy approach. To sustain the momentum of recent success, ESCAP is committed to continuously assist the royal government of Bhutan in addressing its financial inclusion and sustainability agenda for achieving equitable and harmonious development in the country. This conference, therefore, offers a great opportunity to prepare for the future and discuss appropriate policies on digital finance transformation and digitalization in the capital market in Bhutan, together with our experts, representatives from government agencies, financial and research institutes, banks, and other key stakeholders. Ladies and gentlemen, broadening access to finance through digital means can unleash large gains in productivity and investment, reduce poverty, empower women, and help build stronger institutions. It is important that we seize this opportunity to accelerate social and economic development through digitalization in Bhutan. I hope that today's conference will provide us with good insights to further strengthen the financing capabilities of Bhutan in this post-COVID-19 world. I wish the conference a great success and look forward to a fruitful discussion. Thank you. And back to you, Pachara.
Thank you, Ms. Genti, for opening speech. I would now like to invite Mr. Scott Stanley, Development Coordination Officer, Economist from Resident Coordinator's Office of the United Nations in Bhutan, to deliver his remarks. Scott, the floor is yours.
Thank you, Pachara. I hope I'm coming through clearly. Let me begin by offering my thanks to TNTIP and the team at ESCAP, both for the invitation to join this event on behalf of the UN in Bhutan and the resident coordinator, Mr. Gerald Daly, but also especially for their support to Bhutan in this critical area of financial transformation. I think this work represents an important contribution to the future of Bhutan, and I very much appreciate the forward-looking nature of ESCAP's approach and their support, and that includes these webinars and these discussions, both today on digitalization in the financial sector and also last month on the scope for issuing thematic bonds. I also want to recognize all of the colleagues joining here today from Bhutan, and this includes Mr. Dorji Punso and the other colleagues from the Royal Securities Exchange of Bhutan, and also the representatives from the Royal Monetary Authority. I think these institutions have been leaders in thinking about digital finance and how it might be applied to different instruments and products to help support the royal government's vision of a digital Bhutan with more inclusive financial services, faster and more efficient transactions, and more transparency. Many of the issues that Tientip spoke to in her introduction. I would also like to touch briefly on two things I think that are particularly relevant to the broader context of the discussion here and why this is especially timely. And the first is, of course, COVID-19. As Tientip said in her introduction, this pandemic has made ever more clear the role and I think the necessity of digital financial solutions. This is seen here in Bhutan most visibly in the accelerated shift to cashless societies and the push for wider access to digital banking. But of course, the pandemic also opened new windows for experimentation in other areas. And if we look around the world, we can see countries considering new ideas for many aspects of their economies and societies. And this includes how technology and digitalization can strengthen the capital markets. The second point I wanted to emphasize is the link between the discussion today and Bhutan's broader future economic vision, as digitalization was an important focus far before COVID-19. I think this was captured very clearly in His Majesty's National Day address last year that called for the 21st Century Economic Roadmap, with digital transformation very much at the center. And I know that colleagues are aware that Bhutan has been exploring digital technology across society, especially through its flagship Digital Drukgyal program. And we can already see fundamental changes happening or planned for the future across education, health, trade, governance, and tourism, amongst other areas. The Digital Drukgyal program also put the creation of a digital identity for Bhutanese residents as one of its key goals, with digital signatures and biometric technologies that might be the basis for future financial innovations. And so I think that today is a great opportunity to build on all of this and explore the potential and identify the challenges needed to overcome of digital transformation in the financial sector. And so this can include some of the innovations already underway here in Bhutan that might be accelerated: e-payments, digital banking, digital credit, information and assessment, or more secured transactions. And I especially look forward to our dedicated session today on the potential for digital bond tokenization and what this might mean for Bhutan's capital markets. I also think we will touch on the overall financial infrastructure, including regulations and security, given the need for supervisory and policy frameworks to evolve in tandem to support the sector's development and stability. I think Bhutan is moving very quickly in this space, and I know that colleagues gathered here can speak to the many ways this is happening, some of the challenges they've experienced so far, and then together consider some ideas for the next wave of innovation. So let me close here by again thanking all the Bhutanese colleagues, including from the RMA, RSEB, and Ministry of Economic Affairs, for their leadership. And I look forward to hearing from everyone. And then, of course, after today, seeing all the innovations that might arise to help support Bhutan's vision of economic transformation. And let me also again thank Tientip and ESCAP, and also my colleagues in the UN country team in Bhutan for all of their work supporting financial sector development in Bhutan. The UN team together looks forward to working with the royal government in their efforts to help recover from COVID-19, but also beyond in the years to come. Thank you very much for your time and the invitation, and over to you, Pachara.
Thank you, Scott, for the opening remarks. Next, may I request Mr. Dorjit Puncho, Chief Executive Officer of Royal Securities Exchange of Bhutan, to deliver opening remarks. In the meantime, I will open the...
Good afternoon and warm greetings to everyone. I'm honored to fill in for our Deputy Governor, who couldn't be with us today due to some emergency, and he has conveyed his apologies to me for taking advantage of this and to set the context for today's forum. I would like to share some of the major milestones that have set the stage for digital transformation in Bhutan. Thank you, Kunpesha, for approving my slide. I firmly believe that any event that can possibly help Bhutan's journey of economic transformation is most welcome, more so during these difficult times. The need for economic transformation, be it through digital transformation, to complement successful democratic transformation has been articulated by His Majesty in many of his royal address, and today's conference on digital finance transformation in Bhutan on the theme "A Digital Future for Bhutan's Capital Market" is timely. Important groundwork that Bhutan needs to implement in order to build an economy fit for 21st century. If you look at the slides, up until 20 years ago, Bhutan was isolated from the world in terms of modern ICT. Am I audible?
Yes, we can hear. I can hear.
Yes, we can hear you, sir.
Okay, thank you. Just to go back to the slide, like I mentioned, up until 20 years ago, we were isolated from the rest of the world in terms of modern ICT. Television and internet services were first introduced in 1999, followed by launch of mobile phone services in 2003. With little over 2,500 mobile subscribers in 2003, today we have about 735,000 subscription, which is close to about 90% penetration. Similarly, proportion of people using internet has also increased from 0.1% in 1999 to over 90% in 2019. With the effort from the Royal Monetary Authority of Bhutan in its bid to promote cashless society and provide an efficient payment system, RMA launched its first Bhutan financial switch in 2011, and between 2020 and 2011, most of our banks switched to core banking system from the conventional standalone system. Well, if you look at our ecosystem, unlike other countries where financial disruption was brought by fintech startups, in our context, I would say that it is our conventional setups that are embracing fintech as a business model for 21st century. And in 2012, our first mobile wallet services was launched. Around the same time, trading in stock exchange also went online. With improved features in the core banking solution of our banks, in 2016, most of our banks launched their mobile payment application. Today, we have close to over 300,000 account holders who uses mobile payment services for day-to-day transactions. We have also witnessed emergence of e-commerce business, and as an initiative to improve agriculture marketing and encourage fair price discovery, we also started e-auction of selected agricultural commodities. In 2019, to support our young entrepreneurs and their business ideas in terms of sourcing funds, first official equity crowdfunding platform was established, followed by donation-based platform for social entrepreneurs. Besides, to make trading in stock more convenient and efficient, a mobile app was also launched during the same time. Our fintech ecosystem is fairly new, although transaction through mobile payment application and use of digital wallets are gaining popularity considering its wide acceptance. And owing to our government's strong support for digitalization, increasingly our public services are also being made available online through smartphones. Our e-commerce platforms are also gaining popularity among the young population. And on the investment and fundraising front, although the concept is new to Bhutan, through our crowdfunding platform, we have successfully closed 3 fundraising campaigns raised mostly by startups, and we are also exploring to come up with P2P lending platform under the RMA's recent fintech regulatory sandbox framework. While we are yet to assess the impact of digitalization and fintech in Bhutan, I would say that introduction of mobile payment and retail bank applications have definitely eased delivery of financial services and transactions. Payment of utility bills, rural taxes, payment of insurance premiums, and other services through banking apps have helped our rural folks who otherwise have to travel for hours to the nearest office. And we have also witnessed how fintech has proven to be effective in delivery of financial services during the recent lockdown. We recorded a digital payment transaction of more than Newton 1 billion in the first 7 days of the lockdown, which enabled efficient flow of goods and services, which otherwise would have become a logistic nightmare for us. However, we are also faced with numerous challenges, which I'm sure will be discussed in length during the course of our discussion. Even though our internet and mobile phone penetration are considered high as compared to many countries, we are yet to optimize on the bandwidth, affordability, and connectivity. Here, we would require huge investment in digital infrastructure, considering our terrain and geographical locations. We will also require a robust payment system to support the fintech industry, which is a current priority for our central bank. There is also a need for our startups to be more agile and must seek to create disruptive innovation, which I feel is missing right now. And for this, we must invest in education with particular focus on STEM to take advantage of the Industrial Revolution 4.0. Financial illiteracy has also remained a major challenge for us, although there's a collective effort to address the issue, but it would entail a lot of resources and time. Well, in terms of regulatory and government support, our central bank, RMA's commitment to drive financial inclusion in partnership with the government agencies and the financial institutions with key focus on fintech to benefit the underserved also reinforces their commitment towards developing a vibrant fintech ecosystem. Including now our state's initiative on creation of digital identity, which will be one of the key initiatives to drive financial inclusion through promotion of fintech. Financial identity is one of the key elements of financial inclusion, and the digital identity has the potential to promote inclusion. Coming to the capital market, any effort towards digitalization of our market must improve efficiency, reduce costs, and pass on benefits to the end users. Smart contracts and blockchain technology are increasingly becoming the main part of capital market digitalization. And along with the use of digital ledger technology, capital markets are expected to be more transparent, cost-effective, shorten the transaction process by removing the middleman, and become more secure. In recent times, we have also witnessed forms of capital raising by crypto asset industry, like initial coin offerings and security offerings, which are backed by assets, profits, and revenue of the companies. However, due to lack of security and regulations in the industry, particularly for ICOs, it has restrained its growth. I firmly believe that any conventional arrangements for capital market are going to be the thing of the past, as use of blockchain along with smart contracts to issue security tokens are gaining its popularity, considering the cost involved, its ability to trade 24/7 from any part of the world, and its prospect to become a highly liquid asset. Along similar lines, our effort to tokenize securities is an attempt to embrace technology to deepen our capital market and prepare for an infrastructure befitting 21st century digital economy. Our technology should facilitate companies to raise funds more effectively and efficiently. At the same time, provide choice of asset class to the investors beyond our geographical boundary. And we are hopeful that we'll receive the support and commitment of our partners, regulators, and other important stakeholders as we venture into this uncharted domain. Finally, I would like to welcome all the speakers and participants and express our gratitude for taking out the time to attend today's important conference, and I look forward to a constructive discussion. Thank you. Over to you, Pachara.
Thank you, Mr. Doji Puncho, for the opening remarks. Before we move forward, we would like to take a virtual group photo. Could you kindly turn on your camera? Okay. I count 3, 2, 1, smile. 3, 2, 1, set. 3, 2, 1, smile. Thank you. Okay. Let's continue today's meeting again and hear from eminent speaker. Today we have 2 sessions. Session 1, Digital Finance Transformation in Bhutan, Key Challenges and Opportunities. In Session 2, Digitalization in the Capital Market in Bhutan and Develop a Roadmap of Digital Bond Tokenization. On the first session, I would like to welcome Professor Barbara Mernert from University of Hong Kong as moderator of the session. Professor Barbara, over to you for moderating of session 1, please.
Okay, hi. Good afternoon, everyone. Absolutely delighted to be here to meet some old friends from Bhutan and also new friends. You know what I've heard today, I would like to summarize in maybe 3 sentences. The first is that of the imperative for digital transformation in Bhutan. The second message I receive is that the time is now. And the third is that transformation of the capital market, particularly the digitization of the capital market, is a critical component of the overall transformation of the economy. So I think this is going to be a very exciting session. The way I like to do this is after I finish in about, in a few seconds, I will pass the floor to Professor Michael Sung. And then afterwards, I like to ask 3 discussants that we have on this panel to come up for about 2 minutes, a short one, just the most important thing that they learned from this presentation, or the first thought that came to mind, or the most important question that they have. For the moment, limited to just one, and we can come back, have a further discussion on it, and open the floor to questions and thoughts. So then it just, I like to pass now the floor to the speaker, to the presenter, and we are indeed very fortunate to have with us Professor Michael Sung, briefly PhD from MIT, thought leader in fintech innovations, and also an entrepreneur in this area for many years, bridging the divide between East and West, and currently professor at Fudan University. So over to you, Michael.
Thank you, Barbara, and I would like to thank also ESCAP for this wonderful, coordination on this webinar. It's a pleasure to be here, and very happy to see such an illustrious community among the important organizations for Bhutan. So today I'm going to be talking about a digital future for Bhutan's economy as well as capital markets. In the first session, I will be giving a brief description about what this new digital finance world is like, just to do an educational session. And at the very end, I will then focus on giving a couple of examples of how this could be applied into Bhutan's situation. Okay, so second slide, please. So if you look at the original digital revolution, this was the digitization of information. So we took a lot of offline information, whether it's from libraries or from offline computers, and basically we digitized it. And by digitized it, we made it free. We made it accessible and democratized to everyone. And all the new digital economy tools to be able to drive the access of information and the new digital economy business models could come into play. Next slide, please. So if you look at the digital disruption, it has done a number of things, right? If you look back in the 90s and you look at all the products that existed, right? You had a telephone, you had a radio clock, you had a broadcasting station. All of those services and products are now virtualized and basically dematerialized into your phone, right? So these days you can go to your app store and literally download a million applications serving all the different things that used to be actual physical products or very expensive services. The second thing is that these services are by and large completely free. So we call it demonetization. Instead of paying for services, people now can use these services for free. And then the services like Google or Facebook can monetize through advertising and data business models. So basically, developed universal access for these products and services as long as you had a mobile device. And then third, that results in democratization, because now information can be accessed by anyone as well as these services. And so the tools of production and being able to participate in the digital economy has been given to basically everyone. So this is why the digital economy is very, very important. Next slide. So if you look at the digital economy 20 years ago from zero until now, it represents almost 40% of the economy. If you look at the S&P, if you look at the stocks on the S&P, by and large, big tech, as we call it, or technology digital economy companies represent 40% of the economy. And this is very, very significant, right? Especially in the new era of COVID. If you go to the next slide, COVID has been the great catalyst to accelerate digital adoption. If you look at all the digital, the businesses today, offline businesses are suffering dramatically, right? Airlines, restaurants, etc. Online businesses, on the other hand, have thrived. In fact, all the big tech companies have had their stock boost by 50% just in the last 6 months or 9 months since COVID has happened. So we see this big digital divide. The key here is that we need to actually take offline businesses and digitize them. And we see that this coronavirus has become a great catalyst for different countries in the world to be able to push toward digitization. So now, next slide, please. We are going into a digital revolution 2.0. And now this digitization is not the digitization of information. It's much more, it's digitization of value, okay? So anything of value can now be digitized, put into a form where it can be transmitted virtually at zero cost, peer-to-peer in a decentralized fashion without centralized authorities in between. And that is radically going to change the world. Next slide, please. So if you look at the world's digital assets, the world's assets in general, okay, whether it's real estate, which is a $217 trillion market representing 50–60% of global wealth, whether it's commodities like gold or oil or wheat or agriculture products, whether it's abstract things like fine arts, which is actually one of the best performing asset classes, alternative asset classes, is very hard to participate in, or stocks of Apple, bonds. These assets can now be attached in a digital form, and because it's digitized, it be transmitted and shared in a peer-to-peer fashion in a much more easy fashion. And that is a very wonderful thing. But the world's economy can now be digitized, right? Next slide, please. If you look at what happens, then we take actually any asset class. Now we can financialize those world assets the way that we have done with the stock market, right? But not just for the stock market. Now we can do it for real estate. We can do it for bars of gold. We can do it for diamonds. We can agriculture products. And so now that we can add a financialization layer to create new marketplaces that haven't existed before. Okay, the financialization tools include stocks and bonds, derivatives, index funds, portfolio analysis. All those tools can now be brought to bear to any and all assets, whether they're tangible or intangible, right? And what that does, next slide, please, is really bring massive liquidity options to the marketplace, okay? Financial assets or any assets in general, which used to be locked in place, can now get liquidity, can now get investment, can now find buyers and sellers and create marketplaces. This is massively transformative. So let us continue, is it?
Yes, please, Michael.
Here?
On the massive liquidity page.
Okay, let me just get my notes here one second. Okay, so this will provide massive liquidity to any and all asset classes, and this is really the key here, and it will be very important for Bhutan as well, because I think the key here is being able to provide liquidity and investment opportunities to the assets that result, right? So next slide. So what that will do is provide massive financial inclusion for everyone, right? So because now if you can give the tools of being able to join the digital economy, which includes things like cross-border payments, trade finance, to be able to take their goods, to digitize them, and then be able to extract economic value out of them, this will be the key for the future. Next slide. And also, this will be very key for women empowerment and equality as well, because there's been many studies to show that digital finance actually is a key enabler for gender equality, because it's the financially excluded, which are the women who don't have access to the digital economy, to be able to borrow money, to be able to save money, to be able to remit money. These are very key aspects to allow gender equality. Okay, so digital finance therefore becomes a key enabling thing. Next slide. If you look at studies for digital finance in just 5 years from now, massive transformation. There are about 2 billion people who are unbanked. 1.6 billion of that 2 billion can now be banked and financially included, right? This is going to add $3.7 billion of GDP to the emerging economy. And even the data that exists, like 10% of data that all exists in the world, will be put on blockchain in that time. So here we have a massive economic driver that will be enabled by digital finance. Next slide. So now we're facing a very interesting scenario. It's almost a perfect storm of activity, catalyzed by COVID, but also with just the dynamics of how digital finance is all coming together in this year in 2020. So I want to discuss all the factors that are coming together to make this a massive opportunity. First is technology maturation. Next slide. If you look at the original digital economy, it's only when baud rates, right? The ability for technology to be able to get to speeds that you can actually have an e-commerce experience. This is really the point of technology maturation, where it drives the digital economy. Likewise, next slide, blockchain technologies, you can think of blockchain as the next generation internet technologies, is now getting to that sort of technological maturation stage, right? If you look at the transactions per second, we call it TPS, already the 5th generation, 6th generation blockchains are already at the level of, say, the Visa network at 50,000 transactions per second. So you can support massive global payments infrastructure, for example, on blockchain. So I think the technology now is, after 10 years, has now matured to a point where we can have a great enterprise adoption. Next, digital assets as the legal aspects are now also becoming mature. So next slide. If you look at the legal custody, we have the ability now to take any asset, put it into a custodial trust, which is a legal structure, and now tie that to a digital asset. And so now we have a way to actually digitize assets, even offline assets that existed in the real world can now be digitized. So all that sort of legal framework is now mature. And finally, next is the clarity on regulation, right? So if we have the most financially, I would say, conservative zones in the world, things like FINMA in Switzerland, in Singapore, Hong Kong Monetary Authority, Germany, All these areas now, in the last year or so, have now put down full regulation around digital assets. And this is very, very important because now we can have next clear guidance on things like KYC, knowing your customer for banking regulations and anti-money laundering. And it's through these regulations that the enterprise adoption can occur, right? Finally, we have a regulation on even digital asset tax. And as you know, tax is a very important aspect of governments, right? So all of these factors across the technology, across the legal, across the regulatory have now come together such that in 2019, next slide, we have a completely global regulated environment to be able to do securitized token. Okay, so to be able to take an asset, to digitize it, to securitize it and put it into a digital form, and then to use it, have the regulation for clients to be such that the regulatory authorities will accept that. This has all come to pass. And what that means is next, we have an opportunity for massive institutional adoption. So that means Wall Street can come in, everybody can come in and participate in this new world of digital assets, right? So I'm going to run through a number of things that have happened just in the last year or two to demonstrate this institutional adoption. Next slide. NASDAQ has been issuing Bitcoin futures for actually a number of years now, right? Next slide. JP Morgan, Jamie Dimon, who was very against crypto. He said that Bitcoin was a scam a number of years ago. Now has issued his own JP Morgan coin to allow bank to do wholesale transfers of digital currencies. Next slide. Goldman Sachs has supported a Circle, which is now combined with Coinbase to become the largest regulated digital asset exchange in America. Next slide. Endowments and pensions, the most conservative of all financial institutions, now all have some money set aside for digital assets. Okay, we're talking MIT, Stanford, Yale, all the big financial institutions are now coming aboard. Right? We even have, next slide, ETF funds, exchange traded funds, which will allow institutional, retail adoption of digital assets. Right? And finally, you might have heard the news. Next slide. Just in the last few months, PayPal, the largest payments provider online payment provider in the United States, has now allowed their customers, millions of them, to be able to adopt digital assets and to be able to invest in and transfer them. Okay, this is massive retail adoption. So I just set the stage now, okay, by saying that the world is now flipping. Okay, the inflection point has been reached to go from offline world, traditional payments world, to a completely online world where this digital finance tools, cross-border payments, and the digital assetization of the world is going to happen in a huge volumes going forward. Okay, and so what we're doing now, next slide. I represent the FinTech Research Center at the Shanghai International School of Finance at Fudan University, and what we're trying to do here is make traditional finance with this brave new world of digital assets. Okay? How to do digital assetization? How do we take assets and actually create a digital form of it? How can we tokenize? Tokenize means to take an asset and split it up into little pieces and have these pieces be used for aligning stakeholders and things like that. All sorts of business model innovation, all sorts of very interesting plays with crypto economics, applying digital assets to really innovate on the way that stakeholders can actually be aligned to do in new business form. Okay, so today we're going to talk a little bit about several of these options. Okay, next slide, please. How can we use tokenization to align shareholders? Okay, as an example. So we are working on a project, for example, in Mumbai. This is a picture of a major slum area. And basically now we can actually do real estate development on that slum area. But typically what happens is you have to kick out all the people who for generations occupied that land, right? And then you can build the buildings, the commercial real estate that you want to do, right? That's a little bit not too enlightened, right? Because those people who lived on that land for generations don't get any sort of economic benefit. But now we can do tokenization. We can actually attach the real estate project a digital asset, okay, and split that real estate project into, say, 1 million tokens, okay, 1 million pieces that represent a fractional ownership or share of that project, right? And now with those tokens, we can start to give them out to people to align shareholder interest, right? So for example, the people that you kicked off the land, maybe you give them 5 to 10% of the tokens, okay? Now they can participate in land that they used to occupy, right? Also, if we want to build transportation, the land value would increase, the commercial real estate would increase if there was you know, for example, a subway station, right? But the subway station would not get built usually because of the fact that you never make your money back on ticket sales, so they don't want to do it. Well, if you give them 10% of the tokens and they do the structured financing about that, they find out that now they're ROI positive. So they will build the subway station. Now there's a public utility and also builds appreciation of the land prices. So in this fashion, we can actually align stakeholder interests to create new forms of business models that will public-private partnerships that will allow infrastructure to get built. Next slide. So I'd like to apply that now to how we can do it for Bhutan. So Bhutan's probably primary export and natural resource is in its hydroelectric power, okay? And there's a lot of hydroelectric power being built, but there's a lot of projects that won't be built because of the fact that foreign investors into the country might find the project too risky, or that it may not make the return that they want to do. So we're actually doing a project in Pakistan, okay? And we've already worked out the math for hydroelectric power of a similar sort, right? What if we can actually take the hydroelectric power plant and take the electricity that's produced, i.e. take the power production, the future power production of that hydroelectric power plant and attach it to a digital asset, okay? And now we can give those tokens to the foreign investors. So now the foreign investors don't have to bear the brunt of the full, let's say $1 billion or $100 million investment costs, because if they do the math, they will find out that their return is less than 10%. They won't do it. Okay, if they get tokens that represent actual value because it's the future power production, it can make them ROI positive. They can, doing the example in Pakistan, we can make their returns up to 16%. Then they will pull the trigger on building the power plant. So the power plant gets made, right? Who's going to fund this? Well, we can sell those tokens, the future power production, to the local people or the local businesses that would use the power, and we can sell it to them at discount. So essentially, we have made the local users, investors, and stakeholders into this power plant production, and using the financing innovations that we have, digital finance innovations that we have, we can now create a project that gets built and support the economy. Okay, so we have a lot of these very interesting hooks that can be done with digital finance. Okay, next slide. Now, if you look at the economy, the old world economy, say from 10, 15 years ago, was about building infrastructure. Okay, if you look at China, for example, most of the GDP growth in the 90s and into the 2000s was old world economy building infrastructure. Okay, but nowadays actually it's switched. In China, for example, 2/3 of GDP growth is in consumption. Okay, it's no longer in the old world economy. It's in the new economy of consumption. 50% of GDP growth now is in digital economy, i.e. online, not offline. Okay, so next slide. So how do we build infrastructure in Bhutan? Okay, Bhutan is a very challenging case geographically, topographically. It's too small in size. It's very difficult to get a Western foreign investor to invest into, say, internet infrastructure in the country because there's too much risk, right? Again, we can apply these tokenization techniques, right? But if we take say a 5G network project, right, which is billions of dollars, it's very hard to monetize, but then we now attach the future consumption value of all the internet users in Bhutan who go there. So now the infrastructure investor doesn't just make money in the wholesale well, they get a revenue stream, a future revenue stream which you can use digital finance to design in a lucrative way and tie that revenue stream to the investment as well. So again, we can now play with stakeholder alignment to allow foreign investors to come in to build digital infrastructure for the country and allow that to be a new resource for the country. Okay, so we can investigate topics like that. Next slide. What that means is the new digital economy is about the critical digital finance tools that can come into the country. Things like supply chain logistics, things like digital e-commerce, things like cross-border payments and trade finance. Okay, these are basic fundamental digital economy tools that are necessary in order to enable the economy. Most of Bhutan, and actually most of emerging economies, is small to medium businesses. Okay, and if you look at the cost of capital for investment, the cost of cross-border payments, which can be upwards of 10–15%, okay, is way too high because they are using the traditional financial ecosystem to be able to provide that. Okay, by these new digital finance techniques, bringing fintech infrastructure into the country, we can do peer-to-peer cross-border payments. We can literally lower the cost of cross-border payments by a factor of 10. So next slide, please. If you look at the example, there's a company called TNG in Hong Kong. What they did was exactly that. They now, in Hong Kong, there's 600,000 maids in Philippines and in Malaysia. Every weekend, they stand in front of the line in front of Western Union to remit money back to their home country. And Western Union charges them upwards of 10% to do that. And all they're doing is changing the ledger. Okay, so that's the old world economy. They're extracting a lot of economic benefit for doing very little. Okay, so TNG comes in, gives all those Filipino maids on their cell phones an app that can now do a centralized remittance across the border, bypassing the existing financial infrastructure, and they can reduce remittance costs 1/10 of what they were paying before. And not only that, but TNG also innovated on banking. They actually made partnerships with all the 7-Elevens in Hong Kong and regionally in Asia, over 30,000 storefronts. Where now a person can go in and deposit money or actually take out money, and they can do so and do their banking. Okay, so this is the way of doing things. The traditional banking system, who extracted so much economic rent from the world because of their monopoly, can now be replaced by digital infrastructure to much more in an efficient way provide digital finance services to companies. Okay, next slide. So I think the next thing that we can talk about is now the movement toward what we call central bank digital currencies. You might have heard that in the news in the last years when it was really come to the forefront. Okay. Nowadays, the Bank of International Settlements has done a study. 80% of central banks around the world are investigating issuing their own central bank digital currency. Okay, 50% of them have already gone out of the initial sort of proof of concept, now moving forward actually issuing. If you're talking about central bank digital currencies, if you look 3 to 5 years out, the inflection point has been already reached. In the central bank, we got Hong Kong, Singapore, France, in Sweden. The world is now has determined that central bank digital currencies is a thing. And so if you look 3 to 5 years out, there's going to be a brand new international system that's going to be set up, okay, with direct central to central bank interaction. It won't have to go through the existing system of SWIFT. It won't have to be beholden to, say, for example, the US dollar. It's going to be bilateral settlement between central banks. This is a very, very new thing, okay? The catalyst for that, next slide, was the Libra, Facebook Libra in June of 2019. That started the conversation. Libra, has 2.3 billion users, and if overnight they can create a new digital currency for them to use, that's larger than China in combined, right? It's a major force that forced regulators around the world to wake up and be like, we have to get ahead of this. And the first country to really do that, next slide, is China. Okay, China has now, if you looked at the news just in the last 6 months, they're basically on the brink of being a first developed nation to issue a digital currency called the digital RMB, or the DC, digital electronic payment. Okay, by the Olympics or sometime within the next year, China is going to release the digital RMB, and it's also going to catalyze a lot of activity outside. There's a digital euro coming out. There's a bit dollar coming out. And Singapore and Hong Kong are already well on their way of issuing their own digital currencies as well. So we have a global environment now where digital currencies can play. Next slide, please. So I would like to propose that Bhutan Central Bank, the Royal Monetary Central Bank, maybe would like to take a look at issuing their own digital currency. Okay, in order to strengthen Bhutan's ability to join the global international monetary system. Like, for example, if you can actually now do bilateral settlement with central bank digital currencies, instead of having to go through the traditional route of settlement banks in the traditional ecosystem, all the attendant advantages of doing that, it is a massive benefit for Bhutan. Okay, and also I would also point out that there's a way to increase the ability for the central bank to have more hooks on its monetary policy as well as fiscal policy. So, for example, post-COVID, because of a lot of the population is hurting, and you may want to give a fiscal stimulus. How do you actually enact that fiscal stimulus? It's very difficult in offline means. The U.S., for example, they had a $2 trillion stimulus. They're sending out paper checks to people who are already, deceased because of the fact that the system is too, inefficient, right? If everybody had a digital wallet, next slide, okay, which is very easy to implement, okay, it's just a little bit of software engineering to create an app, and now everybody in the country of Bhutan have their own digital wallets. And now there's a transmission mechanism, a fiscal transmission mechanism to allow the central bank to be able to more fine-grain policy, give it to the SMEs in need, okay? And to actually be able to potentially program that, okay? Instead of, you can actually program functionality into this smart money so that it cannot be spent on vice, right? On alcohol or cigarettes. It could only be spent on food, for example. So there's a lot of these new innovations in digital currencies, which is right around the corner. And Bhutan, I think, stands the most to actually gain from. Also, now next slide. Even in a resource-constrained environment where IT infrastructure is not very well established, you can actually implement this. So we are working with a company called Tangent, which is creating these little SIM cards, right? They're essentially credit cards, very low cost, with cryptographic technology built into the chip on it, such that you can actually do a cryptographically secure transaction, i.e., do the things that you need to do transfers, peer-to-peer transfers of digital assets and currencies, okay, in a safe way, right? So that way we can give a card to every citizen in Bhutan. They don't even need a cell phone, and now they can carry that card around and get central bank digital currency or other digital currencies around the world and be able to transact. Next slide. By digitizing your currency, you also allow all sorts of new big data opportunities. So, for example, this is Ant Financial in China, the very large conglomerate. They have something called microloans 310. 3 minutes to fill out an application, 1 second to approve, 0 people in between, right? And they can do that and give microloans to SMEs that banks cannot give because of servicing costs, and they don't have data. By digitizing the monetary system and allowing the Royal Monetary Authority to track the usage of that and to track the data, and then to be able to build credit risk profiles of SMEs, and then be able to give a microloan, which can be done all automated without people in the middle, and to be able to do that instantly into their digital wallets. That is the future. That technology exists. It's not hard to implement. There's reference cases of scaled use cases around the world. That should be something that the Bhutan government looks at. Okay. Next slide. So I propose actually a Bhutan digital finance super app. Okay, which covers all these aspects. Okay, it gives you all the critical functionality that an SME needs to strive post-COVID: cross-border payments. Okay, credit loan applications, trade finance, e-commerce portal, money management. That core set of things would allow massive financial inclusion for all Bhutanese people. Now, beyond that, we can also talk a little bit about how we can actually make it a way to enable the national happiness that is happening in the country, right? You can actually have services for culture promotion and preservation. And then we'll talk a little bit more about maybe even happiness credits. We'll talk more about that in the next slide. All of that can be bundled up into a super app, which Bhutan can use to financially include its citizens. Okay, next slide. I think the other topic is, if you look at the economic drivers of Bhutan, one, of course, is the hydroelectric power. The other has to be cultural, right? Tourism, right? And right now, post-COVID, tourism is decimated, right? So how can we export Bhutanese culture? We can do it by digitizing the culture, okay? Imagine, for example, that we can take cultural artifacts and then create digital representations of them. And we can make them limited collectibles. There's something called non-fungible tokens, which is now a very, very major trend in the world these days, okay? Basically, you can have artwork totally digitized, and you can make limited edition, and you can ensure that they're limited edition because the technology can provably say that you have the only version of this or a limited edition version of this. You can do that with Bhutanese culture, right? You can make playing cards the way they do for sports stars, but with Bhutanese Buddhist figures, right? Or you can, for example, maybe even tokenize blessings, right? And you can actually give blessings to an individual who can buy those blessings anywhere in the world. Why can't they do that now? They cannot verify that those blessings took place, and that is actually linked to a digital asset. And so now we have that technology. We can actually provably say that this monk in this monastery had given 100 blessings that is tied to this digital asset, and this can be bought on, right? So it remains to be seen whether or not that's something that Bhutan wants to do, but the technology exists to be able to digitize culture and to be able to now get derive economic value from that. Right? Next slide. The final piece before I end the session is I want to talk a little bit about Bhutan's thought leadership in gross national happiness, right? We have, this gross national happiness index across, next slide, 9 different domains and 33 different indicators. Very well thought out, working with Oxford researchers to create a quantitative measure for happiness, then to be able to use that happiness index as a policy tool to understand how happiness is evolving and what kind of policy should be put in place, right? It's split among 4 different dimensions: social, economic, sustainability, environmental preservation, cultural promotion and preservation, and good governance, right? And so it represents a multi-dimensional mode of being able to extract the concept of capital, because it's not just now economic capital, it's social capital, it's health capital, it's environmental capital, it's social capital, all combined together, and Bhutan is leading the world. But I would say that Bhutan has probably gotten as much mileage out of the gross national happiness as it exists in its current form. What we can do now is take the thought leadership and the infrastructure, the framework that Bhutan has developed, and actually maybe do something innovative like tokenizing happiness, okay? i.e. creating a happiness, a commodity, a digital commodity out of happiness. Next slide. This was something I actually discussed with Governor Dasho Pinjori at the UN event in Bangladesh last December. We had a shared panel, and we happened to be eating lunch together. And I was talking about the innovations in tokenization, digital finance, and we came across the concept of why don't we tokenize happiness? And since that time, I've been thinking deeply about how to do it. And I believe that we, through all the, tokenization, tokenomics, we call it, strategies that we can put to it, we can actually put a concrete framework to be able to do this at scale in a practical way that will move the needle, right? So let me explain this concept, because this is a little bit, it sounds probably quite abstract, right? Let's make it a little bit more concrete. Next slide. This has been done already to some degree of success in the world today, okay, in the form of carbon credits, right? Everybody's heard of carbon credit, right? Where basically you have this negative externality. You have a bunch of companies that they want to maximize profit, so they're polluting the environment, and everybody has to suffer because of it, okay? So what the EU has done is to create an economic system to incentivize the reduction of carbon. How do we do that? We say, well, we implement a carbon tax, right? So anybody who produces above a certain level of pollution, they get taxed, right? And people who actually reduce carbon by doing a green type of things, they get carbon credits. And now you can create a market with these carbon credits such that there's an economic value, there's an actual derived value that you can actually find in the market as there's demand for these carbon credits occur. Is create an economic system, okay, driven on this carbon credit, where we can influence society to move toward lower pollution. Now, we already know that lower pollution is one of the dimensions, right, environmental preservation of happiness. It's not the only one, because we have 8 other domains that is defining happiness, at least in the Bhutanese sense, right? So we can do the same technique. We can actually create an economic incentivization system along the other dimensions, along you know, promoting health, promoting social ties, promoting education, promoting you know, improvement in lifestyle. Okay? And those things can now be tied to an economic system. The key aspect of this to work, okay, is you need enforcement. Okay, you need the government to say this matters, and we will want to create this economic driver by implementing essentially a tax on and promoting positive behavior, right? Bhutan, I think, is moving toward this direction. Okay, you already have a gross national happiness index, which is driving your sort of policy, but you don't have any way to actually do anything about the policy other than to approve projects in line with gross national happiness. Now, with the ability to tokenize happiness, okay, we can actually create a fiscal driver. Okay, we can actually literally mint a commodity out of happiness. Okay, and happiness tokens we can call them, and we can give those happiness tokens to people who improve their own happiness, or we can improve it with on a greater scale and for societal happiness. You can actually create a whole economic scheme to incentivize people to move in those directions. And actually, I've already started working with a number of partners toward this. We actually have economic simulations of how this could work in Bhutan, where we can apply these economic drivers and incentivize people to move toward greater happiness and more regenerative economies. So what that does is, next slide, is that we can basically incentivize benevolence. Okay, this is a very interesting concept, right? Because if you ask people to be charitable, okay, of course, everybody should be enlightened to be charitable anyway. But if we can actually create a economic infrastructure where we can align public good with private interest, i.e., you get paid in happiness tokens for reducing pollution, for increasing education, for increasing cultural, promotion in the country, right? And we can align that to public good. That can actually move mountains. And so, at the very end of the slide, before I end, is this: I believe that by tokenizing happiness, we can actually give a fine grain for the Bhutanese government to be able to really push fiscal policy for gross national happiness for the kingdom. So with that, I would like to say that there are a lot of very innovative things that we can do. This tokenizing happiness concept seems very abstract, but I can tell you that this is something that is actually implementable, and it's something that we have the tools, we have the thought leadership from the standpoint of the tokenomics or understanding the economic theory of these things. We have the technology, and all we need is the Bhutanese government to want to do this, and we can actually implement that. Beyond that, we have the tokenization infrastructure. We have the ability to issue your own digital currency, to be able to latch onto these digital finance tools to really enable the country. Like Bhutan being limited in scope and being limited in geography, having these natural constraints, okay, is a perfect region to be able to leapfrog into the digital economy. You do not have the baggage of the existing financial ecosystems, say in the United States, where we have banks who don't want to take the next step because they're maximizing the profit now, right? Bhutan, because of the limitations in its constraint, has no such legacy baggage, okay, and can really leap forward into the digital economy and embrace these tools, which I can guarantee you will be the future. Thank you very much.
Thank you very much, Michael. That was masterly. What I like to do is to call on the three discussants, as I said earlier, to each give the uppermost thought or question that's top of mind. If I could call first on Mr. Bijoy Chatri of the Royal Securities Exchange of Bhutan, please. Could you say, what is top of mind, having listened to Michael Sung for, say, 2 minutes, please?
Okay, thank you, Barbara. And, and good afternoon to every participants here today, and a very detailed presentation by Professor Michael. So the first thing that comes in my mind when Professor presented his presentation is that the world is digitizing because we need immediacy, and organizations should realize that it is not about inserting technology into the services. There is a larger shift, I think, and the part of this shift is around trust and utility of the organization. As we are in the era of Bank 4.0, which is all mobile, bank anywhere, anytime. But what will happen if POS machines, ATMs, internet banking, or even the brokerage system from where we trade online goes down for 10, 8, or even 3 days? So what does this mean for the organization? This may not seem problematic in the society and the market that we live in now, but it will definitely will have a larger implications 5 or 10 years down the line. I also think that when we talk about digital finance transformation, what we have to see is there needs to be a healthy collaborations and a good ecosystem between regulators, service providers, and aspiring fintech startups. For instance, I saw this article where they have this PSD2 regulation, which is Payment Services Directives in Europe, which ensures the banks and financial services to create mechanism to enable third-party providers to work securely, reliably, and rapidly with the startups and the banks. So what this will do is the organizations, any bank or the financial institutions in this case, must be willing to provide sandboxing environment for developers, programmers to play around with their APIs. This will ultimately pave way for advancement in technology, in-country expertise. Fintechs will innovate products and services around the traditional services provided by the organization. And this is what I personally believe will bring true digital finance transformation in Bhutan. And also I feel that like what Mr. Michael presented, the future lies in the utilization of frontier technologies such as quantum computing, the artificial intelligence, the Internet of Things, big data, and now blockchain is a big thing. So if these are applied at various levels around the products and services provided by the conventional banking system or any financial institutions, they will be able to extend their services and utility. If we are to extend this, what will happen is opportunities will for startups and institutions who are going to implement these technologies to make process easier. For to give an example, a simple IoT device can be embedded into an electric meter to calculate the readings and transmit it via the internet to big data for storage and analysis, and finally apply some machine learning or AI to make judgment and deduction. So now, based on the finding, the client can be notified of payment or can also be automated to debit the amount or from his or her account. So what happens over the period of time, there is a huge collection of data which becomes a dynamic KYC or the know your client, having various behavior and pattern about the client. This is not just about the electric meter, but it can be implemented to the behavior he is when going out for dinner or paying a water bill or house rent. So ultimately, this will lead to maximizing profits, efficiency, minimizing costs and error, and increasing convenience in daily life of the customers and various stakeholders involved. So I think this is my remark.
Thank
Back
you.
to you.
Thank you for these very insightful comments, and your exchange, I believe, will have a very critical role to play in this whole transformation. I'd like now to call on Mr. Kisang Jamsho of the Ministry of Finance, please. Your top of mind comment from Professor Michael Song's presentation.
Hello, good afternoon and good morning. Can you hear me?
Yeah, but you sound a bit far away.
Oh, okay. My question, my comments or my view that I would like to share. Thank you, Professor Michael, for the presentation. On the digital finance, my digital finance, it is from my point of view, it is much easier for transforming ourselves, for having a good infrastructure where we can transform digital finance. But on the other hand, if we look into the financial literacy or technological literacy among throughout the country, then isn't it a challenge for transformation on digital finance, where financial literacy as well as technological literacy is low? And if we go ahead, then advantages of digital finance transformation, where the benefits will be only to the ones who will be using it, whereas there will be a major chunk, in fact, the whole society where the usage is less, then they will be more isolated. So the different when the current government, since the current governments have the objective to decrease the gap between haves and have-nots. So when the objective is that going to the digital transformation, that I feel the challenge there will be a risk of increasing differences between haves and have-nots. Thank you.
Thank you. I think you've hit on the most important point, which is that the digital transformation must be inclusive and must eliminate the inequalities that are present in Bhutan as it is in any society. And last, I would like to call on Mr. Kasang from Beta Park. I was intrigued when reading your bio with a reference to your passion for the gross national happiness-based concept of sustainable development. Would you like to say a few words, top of mind, in response to Professor Michael Song's presentation, please?
Thank you, Madam Moderator. Am I audible?
Yes, you are.
Thank you, and thank you, Professor Michael, for a very enlightening presentation. And as Madam Moderator mentioned, what caught my attention was towards the latter part of your presentation, the tokenization of happiness. Of course, the whole presentation from start to end was enthralling, exciting. The way you took us from a digital revolution 1.0, democratization of information, to digital revolution 2.0, democratization of digital assets. We could only reflect back when we started internet in Bhutan in 1999, as the CEO of RSEDL recalled as well. We had our first ICT policy done in 2004. We had our first Information, Media and Communications Act in 2006, and I was lucky to be part of that journey in the Ministry of Information and Communications. Looking back on the hindsight, what I gather now is the need, I think, perhaps to for all stakeholders, as emphasized by the presentation, to come together, to collaborate. When we were working on the legislation on data protection, privacy, information and communications, digital signature, there was hardly communication with the central bank, which was the whole financial sector. So I think the need for that comes out very clearly: collaboration, cooperation, and partnership, which was also coming out clearly. The presentation also highlighted, I guess, the alignment, as in any digital transformation, among people, the readiness of the people, the skills that are required by the digital economy, the processes, especially in the financial sector. While there are standard processes, I think a large part in our banking sector is driven by legacy systems, and the banks are lost trying to huddle up or pile up new technologies on the traditional systems, and half the time, rather than saving costs, they spend millions and do a lot of resource wastage. Something that I think the financial sector needs to look at. Do we just keep on piling systems, patching, or do we jump, leapfrog, and go do a separate digital banking altogether and move fast? And also, of course, technology is there, as Professor Michael clearly mentioned. And when we have now reached a stage where we can talk about tokenization of GNS, when at some point when we started, we were lost in defining indicators, targets, and many people questioned how GNS could be measured. But it is so encouraging to hear that the happiness tokenization is possible. There has been a lot of research, and I'm really interested to take this conversation forward. And we are an institute recently, actually registered only last month, Madam Moderator, and we are developing a tech-based education system on the outskirts of Thimphu, about half an hour drive up the mountains if you are in Bhutan, and we are hoping to contribute to this digital transformation journey, especially in terms of building the right capabilities, the skills. And one of the tracks that we are focusing is on computer science, cybersecurity, and information technology. And I'm grateful to both ESCAP and the Securities Exchange for getting me on this session today. Thank you, Madam Moderator.
Thank you. And from what I've heard from the three discussants and earlier speeches, it's very heartening that actually Bhutan, the leadership in Bhutan is ready and eager for the digital transformation. And I just checked and find that the internet infrastructure is rather good. 60% internet penetration, 95% mobile phone penetration. That's, that's very hopeful. Now, on this very positive note, I'd like to hand over to the next moderator, which is Dr. Masato Abe of UN ESCAP, and to thank Professor Michael Sung for this very interesting, very exciting first half. And Michael, I'd just like you to note, I don't know what you can see or can't see, that we are now, the screen is on page 49. Okay, on that note, I'll hand over to Masato, please. Thank you.
Thank you, Barbara, for your very able and smooth, the moderation. And thank you for the Michael for the your first, half of the presentation. Others, the three distinguished discussants for the, the Barbara, the comment as well. Now we move to the second session of the today's, online, conference, and this time. We have a couple, the objectives. Number one, I believe that, the first, Professor Michael's presentation, gave you a lot of ideas, information, and, the directions, and even some opportunities and challenges to the Bhutan. And now I would like to a bit slow down. And that's the number one. And the number two, by doing that, I want to focus more on to the some specific, the financial products or schemes or direction, right? And why I'm telling to to this way that after this workshop, that we, the United Nations ESCAP. The working with the RS, the EB, and also the other, the stakeholders in Bhutan. We would like to organize the follow-up activities next years, and we have some, the budget fund as well, right? So by discussing about the more specific, the project or product or services or direction, we, we want to, move to the right, this conference is not really the final event, right? Even though we already shared, the received a lot of useful information and even, future opportunity. But from now on, by listening, again, Professor Michael's presentation, then, the inviting the, the other three distinct, the discussants. We, have the three more discussants from your country, Bhutan. And to figure out the which really, the product or services or scheme, the project we want to take over from now. Of course, so far, right, we received, as I mentioned earlier, we received the rich information already, and our strategy option could be many. But unfortunately, we cannot, take over everything. Particularly, our office, UN ESCAP, cannot take over everything. But we would like to take over one or two, possibly, or three, maybe one or two, the possible product or services or project we want to, identify, and after that we discuss further with our local hosts and to, the propose some, the future activity as well. Having said so, I would like to invite once again the Professor Michael Sung for your, second half of the presentation. So, Michael, floor is yours. Michael, maybe you are muted. Michael, I think you are still muted, unmuted. I wonder there is another, technical issue. Michael, I think you are unmuted, and sorry, I cannot, open your mic. Kumbum, you have any? Yeah. Now I got it. So, floor is yours, Mike.
Unfortunately, we're working under extreme technical challenges. I cannot see the screen. I can't, it's very, very difficult to navigate. I'll try my best. I think right
You're
now
on
we
slide
are now in the
49,
phase,
Michael.
the
You're
second
on
half.
slide 49. Slide 49
Okay,
now.
I should be, what I actually want to be on is the Bhutan capital market development slide, the one that with Tiger Net, the one after Bhutan fine-grained G&H policy management. If we can get to that slide, I think it's 51 maybe.
You're there.
Okay, great. Okay, so I think what we want to talk about now is really take some of these digital finance principles, okay, and apply it in a very specific use case. And I think this was probably one of the most meaningful for Bhutan in its stage of development. Bhutan, of course, being least developed country and also landlocked developed country, very constrained environment. But despite these constraints, Bhutan is doing very well in making its progress, and because of this, in the next number of years, we'll be graduating from this least developed country status. And as a result, the preponderance of the foreign investment into the country, which is in the form of concessionary loans and grants, will slowly have to be phased out, right? So in this environment, then, Bhutan needs to grow up, right? And importantly, develop its capital markets. Okay, so today the topic will be to take all that innovation we had discussed in the first half and figure out a way to apply this in a meaningful and practical way to help Bhutan develop its capital markets. Okay, so next slide. Okay, so first, let's talk about the current state of affairs. ESCAP, congratulations for helping Bhutan issue its first green sovereign bond in September. It's a great achievement. It's a $40 million offering offered at 6.5% cost. And so it's rather high, I would say, for even for an emerging country. The interest rate is pretty high. If you look at interest rates overall around the world, you know that they have fallen dramatically in the last couple of years because of various central bank interventions. In some cases, in places like Europe and also in Japan, it could even be negative. If you look at the chart there, you see that starting from 2019, interest rates have dramatically dropped. And overall, we see a range of interest rates from negative in some cases to for U.S. Bonds, something on the order of 1.5% to 2%. Right. So for the fact that Bhutan has to issue debts at 6.5%, there's a huge gap here. It's very expensive. Okay. And so today we're going to talk about how we can address this. Now, on the right-hand side, you see a sort of pictorial diagram of how the risk premium for these, the cost of capital is calculated. Okay. So first is the nominal exchange rate or risk-free rate. With an inflation premium, okay, so that's the baseline. But if you look at the risk premium, it's divided into three components. One is maturity risk, okay, so we will talk about that. These are typical, yield rates across different maturities is well understood. But adjusting for that, there's basically two components that affect this risk premium. Okay, one is the liquidity premium, and the other is the default risk premium. Now, Bhutan is not credit rated, being such a small country that has not issued sovereign debt in the past. Therefore, it doesn't have a rating, and so therefore there is a little bit of a priced into the model. There's nothing we can do about that at the moment. What we're trying to do is to get Bhutan to develop its bond market, sovereign bond market, to set a yield curve and to assess standards. Eventually, it will be more credit rated, and with that credit rating, the bond rates can come down. Okay, the thing that we can really affect now, okay, is that liquidity premium. Okay, and so that's the focus of today's talk, is to figure out how we can actually, increase liquidity of these bonds such that the liquidity premium can be reduced. Okay, next slide. So before, in the other slide, I think the key, if there was one concept to really take home from the first half of the lecture, it is the fact that the digitization of assets represents a very, very good way to be able to provide liquidity to those assets. Okay, if those assets are tied in real estate, if those assets are tied into fine arts, and these are extremely non-fungible assets. Okay? Very difficult to trade in these assets, right? If anybody who's ever dealt in real estate will know this. God forbid you have actually tried to do cross-border real estate transactions, right? There's just so much friction related to that, right? But the instant now that you can take all that complexity of transaction, whatever, the offline, the manual, whatever, and now you can digitize it. Okay, again, the same way that you went from library books, offline things to online, you can digitize that information, made it extremely fungible, easy to access. Okay, and also all the data analysis you can put on top. Once you digitize anything, now you can actually do a big data thing. You can actually do credit risk analysis. You can do all sorts of analysis, big data stuff on top to be able to reduce your credit risk, right? So therefore, with the liquidity of provision, okay, we can unlock these assets and we bring all sorts of new financialization tools. Okay, so today we're going to talk about that. Next slide. Okay, so what we're trying to do here is apply this new concept of tokenization. Okay, when I mean tokenization, I'll explain. To be able to take typically into a trust-like legal structure which can hold assets of various types, and then to be able to attach a digital asset to that legal custody of those assets, and then you have a binding of this digital world to the underlying asset that backs it. Okay, and when we talk about tokenization, therefore, we talk about being able to split those assets into smaller and smaller pieces, tokens we call them, okay? And so we can fractionally ownership, essentially, of the underlying asset base by creating these digital asset tokens. That's okay. We can apply this across any type of assets. We talked about this for real estate, fine art, and commodities, and even intangible things like cultural assets or somebody's future net worth. Okay, we can actually do that. Today, we're going to talk about that in a very specific context, which is securities. Okay, specifically, okay. And so let's apply this digital finance innovation to bonds and see where that takes. What does that do? Well, once you digitize something, you basically reduce any sort of geographical limitation, right? Because now anybody with a cell phone, anywhere in the world, can now receive those tokens, pay money for those tokens in a digital form, and so all those geographical constraints are reduced. So next slide. So what that does, you now ask that very local could only have local investments, say by the local commercial bank for these sovereign bonds in Bhutan's case, and now we can extend it to a larger global audience and market. Okay, so this in terms of global to invest into the bonds in Bhutan, and therefore liquidity provision is vastly increased. Okay, so just by digitizing and by tokenizing, you get access to a global base, and this will increase the liquidity of those bonds. Second, next slide is the tokenization part. Okay, the fractionalization of that underlying asset, in this case a bond, can now be fractionalized and arbitrarily. So if you talk about bonds and you talk about sort of sovereign bonds, typically the only people that can participate, or the only actors that can participate in this, are large institutions. Okay, because if you need hundreds of thousands of dollars, or in the probably the most reduced case, some tens of thousands of dollars, then you cut out a lot of potential investors. Okay, but now because you digitized it, okay, that means that the cost of issuing a very fractional amount of bond versus $100,000 or $1 million is significant. Okay, there is no additional cost because everything's been digitalized. There's all the associated costs of the traditional bonds are removed when you digitize them. Okay, so that means that you can fractionate ownership of these bonds again to an arbitrary degree. Okay, $100 in this particular case, but it doesn't have to be that. $1 can also participate, right? And so digitization of these assets, through fractionalization, also potentially radically increase liquidity provision, because now you lower the bar of entry. You don't need $10,000 to participate. You don't need $10,000 to participate. A grandmother in Brazil, all across the world with their cell phone, with $100, can snap that money to Bhutan and give that liquidity to the bonds. Okay, so also these two factors, the globalization and the fractionalization, to reduce the bar so that there's new classes of investors, even retail investors, not just institutional investors, can participate with equal degree of convenience. Okay, so these two factors then drive the liquidity of the bonds. Again, we're talking about the risk premium is the fact that there is no liquidity in the market. Now you have that liquidity added, you can reduce the cost of capital. Okay. Next slide. These digitization, we now also again the lesson from the first half of the webinar is to talk about how we can now financialize these markets and provide liquidity to these markets that don't exist before, right? So if you now digitize these bonds and you have a broader base of people to participate, you can actually create a market, right? And this market now perform this sort of market price discovery function, which is very necessary to develop, say, a secondary market for time, right? And so real-time price discovery comes in. Next slide. With real-time price discovery, then you can have financial actors such as market makers and other liquidity providers, right? And they will only, because they can make a profit. And they can only make a profit if they have real-time price discovery and there's liquidity. Okay. So I think the key aspect of all this is in the key ability to digitize these bonds, and we'll explain why that will actually allow all these benefits to happen, right? Because one, we can now disintermediate the market, okay? Instead of a typical bond market, we have all these markets, and you need to be institutionalized, you need to be you have relationships, everything is offline, you spend money, create different OTC trading desks, all those kind of stuff. All of those things actually can be drastically simplified, because now again, go from an offline manual and there's legacy systems and there's all sorts of dynamics and things like that. You go into an online world where all these things just magically work together. You cut out the middlemen and you can reduce costs, right? Next is now you go from a scenario where you have to be beholden to the markets at specific times. Markets are during market opening hours. Now there's no restriction on that because there's no exchange that's necessary to be able to do that. You can do that. You can actually trade anytime, 24/7. Right. Next slide. The next benefit is in terms of efficiency. The promise of blockchain and also this new digital technology is that it enables multi-party coordination and it enables people to be able to do things much more effectively. I'm working now with a bunch of what we call distributed blockchain technology for exchanges, right? In the exchange settlement process, it's very difficult. You have you have custodians, you have global custodians, local custodians, and depositories and the exchange itself. You have all these partners that are using essentially email, okay, message passing, serial fashion to be able to settle these the securities. And there's settlement risk, and then there's time. It actually takes T plus whatever, a couple days to be able to do the settlement. Now, if you put it all on the blockchain, the idea here is that now all that information is in this sort of global cloud in the registry. All the parties, all the stakeholders can look at this cloud and actually understand what's going on. In parallel, it's not a serial process anymore. And so for this reason, multi-party coordination as well as the settlement times can be instantaneous. Okay, so it goes from T+3, T+2, T+1 to seconds. Okay, and that's huge in terms of being able to get to a broader class of investors and to be able to do more liquidity provision, because now resources are not tied up for 3 days. That resource can be churned over at a much faster rate. Okay, next slide. Okay, yeah, so let's go to, actually I can now see for some reason. Okay, this is great. So if we can go to the smart contract automation slide, next slide. Okay, so now we can basically automate this, and we can actually, everything automated, there's nothing in between to be able to allow, there's no human intervention, there's no intermediary agency. And for that reason, there's all sorts of efficiencies that can come up, right? Next slide. So what that means is we have massive cost reduction, okay? We can, actually, people have done studies to show that the transactional operational cost can be reduced by over 90%. This is very important, right? Bhutan does not have a well-developed enough exchange or bond market that to be able to put in large capital resources to be able to operate this kind of stuff. This is a lesson again from the digitization, is that the costs to be able to do the things that we're talking about today can be drastically reduced. In fact, it's commoditized at this point. So anybody can actually, even down to the retail level, you can operate your own exchange to do your own digital asset stuff. Certainly at the level that Bhutan is looking at in terms of a small, humble sort of digital bond market, it'd be very easy to facilitate using existing sort of infrastructure technologies. Okay, next slide. The next important element of all this is we're in the digital economy, and we have things called big data, and we also have things called AI. And these technologies now can take this digitized information and now provide a much greater degree of analytical power to be able to look at things like risk, to look at compliance, to look at anti-money laundering, all sorts of things. Okay, and all of that through the smart contracts can be automated. Okay, so we have all the ability to take this new digital economy infrastructure and apply it and overlay on top of the existing financial infrastructure to do more and more sophisticated things. All right. Next slide. Okay, so that's in a nutshell. Okay, is a crash course of how digital securities can be brought to bear to do very innovative things. Okay, now I'm going to switch topics a little bit, and I'm going to talk about another phenomenon, which is the phenomenon of green bonds, and we'll tie these together at the very end. Okay, so everybody may be familiar with green bonds. Green bonds has now become quite a exciting class of bond that's emerged just in the last few years. And that main idea here is that these bonds can now be used and green finance use cases, right, across renewable energy, energy efficiency, clean transportation, even waste management, water resources, etc. Right? There's a whole class of ocean type bonds in terms of blue bonds, right? So these green bonds are mainly used to fund this new, more SDG goal driven use case. Next slide. And this market is growing quite fast. Okay, if we look at the green bond market last year in 2019 is roughly about $250 billion. Okay, that's quite sizable over the years. So there's been about 1 trillion green bonds issued overall in the history of this market. To date, even despite COVID, I think now, if this graph is a little old, but already in 2020 we hit roughly 2019 levels. So this is meant to be an ongoing trend. Okay, and this is right before you might know that the Chinese central government is going very strongly into the green bond market. They are planning to themselves issue trillions of dollars of green bonds over the next number of years. Okay, so this market is basically set to explode across the board. Next slide. Actually, it's a very interesting scenario. Last year in 2019, there was the UNEP Finance Initiative Principles of Responsible Banking held a forum, and 130 of the top banks in the world and other financial institutions holding AUM of over $47 trillion is now committing those funds to climate and sustainability. Okay, so what we have is huge financial institutions, we're talking the JP Morgans and BlackRocks of the world, okay, have now committed their investments to invest into sustainability because they know that short-termism in terms of investment for short-term profit isn't going to allow them to be sustainable, okay? So everybody's bought into this message, and now actually there is even more demand than there is supply for high-quality green bonds. Okay, next slide. So, so the key to green bonds, of course, is being able to rate a bond's usage of funds primarily, and to be able to track and trace the resulting infrastructure that's developed according to what we call the green bond principles. So there's basically a number of sustainability rating companies, the International Capital Markets Association, the Green Bond Principles Market, the Climate Bond Initiative. There's a few standards in China, they have their own, okay, where you have to follow the rules to be able to be bond, okay. Most of that has to do with the use of funds, okay. They have to just provably say that the funds that you use are going to be used for these green certified type, applications, okay. And there's now also different variants of this, okay. We have social bonds, which are more toward social type activities, and green and social bonds are now classified generically as sustainability bonds. Next slide. Okay, so with this comes a concept called greenwashing, okay, which is basically because the standards are just getting set, and because actually the compliance, the ability to actually provably say that you are compliant to the standards is such a new thing. There aren't too much enforcement agencies out there to be able to spot bad behavior. There's a concept called greenwashing, okay, which is basically saying that you claim to be a green finance bond, but actually you use the funds for other things. Okay, there's been several cases of this where the bond funds are going to be used for this green project, then you cancel the project, but you keep the money, right? So there's all this sort of bad behavior in the market. It has to do with the fact that the market is not fully developed fully, and so basically there is a discount, and this is why I say that there's a larger demand for high quality green bonds than there is supply. There certainly is a large supply, but most of those are at a lower standard that cannot unlock the compliance that, say, a JP Morgan or a BlackRock needs to do. They need to actually invest in something that is certifiably and rated green. Okay, next slide. So this is one big problem. There is ESG standards coming up, right? Environmental standards, social governance standards. So not just financial institutions, but corporates around the world also are now trying to up their ESG scores. Next slide. And the process for ESG ratings is actually quite involved. Okay, there's all sorts of criteria and components and overall ratings and enforcement and things like that. It's the same problem with the greenwashing. Okay, the standards are very hard to verify, and the ESG ratings are very hard to enforce. Okay, to be able to figure out whether or not companies are doing compliant things. This is the key to be able to unlock that $47 trillion of financing. The financing exists. They want to do it. They cannot find the quality bonds that follow these rules. Okay, and I think the solution therefore becomes blockchain in the digital. Okay, so this is now a new concept. Okay, when we're talking about digital green bonds, we can go and talk about the digitization, providing liquidity, and increased settlement time, and all the benefits that I said before. But the enabling thing for specifically green bonds, okay, is the ability for blockchain to be able to track and trace all these ESG requirements and compliance, all this use of funds for the green bond principles, to make sure that provably make sure that it's compliant, such that a JP Morgan will say, look, because of the technology, we can provably say that this is green to the standards that we care about, and therefore it can unlock the compliance that the process that we go through to unlock this major funding. Okay, so blockchain and the digital versions of these green bonds now isn't a sort of nice to have because it's more efficient and it increases liquidity provision and stuff like that. It's a must have, okay, because if you do not have it, you cannot prove to the compliance level of these financial institutions to unlock the money. Okay, so so now we have this nice, perfect storm. Okay, we have digital finance and the technology maturing, as I said before. We have the first securitized exchanges that can allow you to do the digital securitization. Okay, we have all the benefits, and the first moving digital bonds and digital securities are just coming up. And now we have this green bond movement coming in, where it's already soon to be $1 trillion market. And in order to unlock those $45 trillion of funding, you need to have a digital form of these bonds so you can do the tracking tracing through the blockchain. Okay, so all of this is coming together magically in 2020, and I think this is a very, very good year for Bhutan to explore these two trends and be a first mover to be able to do that. If Bhutan issued a digital green bond, okay, it would be one of the world's first, and because it's one of the world's first, it would be very, very, I would say, advertised, right? And so there will be extreme interest around the world in how this bond would perform, more so than, say, if Bhutan issued one, down the road and it became commonplace. Okay, next slide. And I will say that the blockchain compliance is already set. This is actually a screenshot of a company that I'm working with called All Infra. And this is very interesting because if you look at bond tokenization, digital securitization, and things like that, it's such a new field. There's mostly technology-driven companies, okay? But All Infra is a little bit different in the sense that these guys were originally investment bankers, okay? So they come from the market, the financial institutional side. And so they understand how to do the life cycle management of this bond issuance process, how to do the compliance in a financial institutional grade way, how to do the ESG tracking so that financial institutions can do that. How can you be regulatory compliant on tax and do all the tracking? All that kind of nitty gritty stuff is really what's necessary to drive this industry. They have basically figured out. This is actually a screenshot of a process of them unlocking the compliance to check the whitelist for AML and KYC, to check the policies, which include to see what your ESG standards are, to automate that process, and to be able to do a settlement of this digital bond through its life cycle. Okay, so the reason I showed this slide is just to say that this is not conceptual. Okay, this is something that there are companies already out there doing that can actually do this this process, to the full level of for say a sovereign bond issuance. Okay, next slide. Okay, so we talk about this in the context of what's been done already. Okay, well, actually, just in the last couple months, Singapore has done this. The Singapore Stock Exchange, SCX, in combination with HSBC, one of the world's largest banks, in combination with Temasek, which is the Sovereign Wealth Fund of Singapore, a very, very reputed entity, issued a 300 million US dollar bond. It was a Singapore dollars of around 400 million. And they've done a successful offering for a coffee company, in fact, right? And HSBC had basically been the partner to allow the settlement of these bonds through its on-chain payment process. This is a live case, and it's really one of the first cases. And I point out SGX in particular because SGX actually might be a good partner, one of the few exchanges in the world which has already have regulated their digital assets and have now actually issued a digital security, one of the world's first. Okay, next slide. Okay, so now let's talk about what Bhutan should do. Okay, so how can we unlock for foreign portfolio investment into the country? Okay, what is that product that Bhutan can offer that is strategically getting with the times? Okay, is latching onto the trend of these green bonds, and not only latching onto it, but being a front runner. Also latching onto the digitization of the world and also being a front runner, but also leveraging Bhutan's specific branding and characteristics. Okay, what I think that would be the next slide. My suggestion to do a Bhutan sovereign happiness bond, okay, instead of a green bond. Okay, we've already talked about the idea of green, which is an aspect of happiness, right? You know, basically environmental conservation and greenness, okay? But we also talked about these social aspects, right? We already have social bond principles as well, right? Where basically, you know, the money will be, the use of funds will be used to enhance social good as well, right? Whether it's education or women empowerment or, you know, societal, you know, harmony, etc. Right? Bhutan again already has a very unique form of quantifiable happiness that they've developed. It's a very rigorous UN has a resolution, a UN Happiness Day. This has already been accepted worldwide as a standard, right? And so I think we can combine these principles to have Bhutan lead the sovereign happiness bond issuance. Okay, next slide. And there is some precedence for this. I'm not just saying this out of the blue. Okay, there's actually, as I mentioned, a sort of sister market to the green bond market, which is called social bonds. Okay, and social bonds, which was a couple years ago negligible, it was you know, only $20 billion in 2019, has went 5x of this year, and the year's not even over. Okay, it's went 5x by October in 2020. You can understand why, because post-COVID, there's now a lot of need for social support, and so many countries are now issuing social bonds as well. And the leadership in this market is now Korea. Okay, the Korean KRX, the Korean Stock Exchange, supports ESG and sustainable business, has issued, has developed a whole exchange segment called the SRI bond, a social responsibility investment bond. Okay, and Korea actually represents over half of the social bond issuance that, you know, over $50 billion of this. Okay, and social bonds is, if you look at the number here, is roughly 1/2 of the green bond market of this year as well. So social bonds has now become a big thing. And I would imagine in the years to come, especially because of the COVID crisis, this segment will increase as well. So we already have a precedence for green bonds getting up to speed. Social bonds is coming around the corner. Both these two aspects are fundamental pillars of happiness. And I think Bhutan can take advantage of that. Okay, next slide. So I propose that Bhutan updates the happiness index, leveraging its methodology to create Bhutan happiness bond principles, to set the standards of happiness, you know, of social responsibility, of greenness, of sustainability, and rebrand that as a happiness bond principle, of which I think Bhutan should find that exciting, because they're already leading the world in terms of happiness index, and set the standard for this for the market. Okay, the this type of developments are already being exported. There is the social stock exchange initiative set by the UN as well, where basically a sustainable stock exchange initiative, where they're helping, this UN department is helping stock exchanges around the world. I think there's actually quite a few stock exchanges that signed on board, including the Korean Stock Exchange, to help them to imbue sustainability principles into their bond offerings. Okay, so we don't have to work from scratch. We can literally copy paste, take the leadership of the best practices for sustainability and the frameworks for that, and tweak it with just the components to make a special Bhutanese brand version of that for happiness across, again, environmental conservation and social impact and governance, and if you want, cultural promotion, to be able to create a standard for the world. Okay, next slide. Okay, now when we talk about the secondary market development, we need to get really just straightforward about this. Okay, Bhutan has a very limited capital market. Okay, there's 22 companies that are listed. Okay, aren't that many local companies of the scale that makes sense for them to list. Okay, there's 16 bonds that have ever been issued, just over 100 and I believe something like $115 million worth of bonds. The first sovereign bond just got issued. there is no secondary market. The whole market consists of a handful of local commercial banks who just buy and hold, okay? And so, you know, I looked at the other sort of bond webinar that was said. We have a bunch of these erudite economists coming in and saying that, you know, they need to stay local to reduce systemic risk of, you know, foreign investors and things like that. I would probably take a completely different approach, okay? There is no secondary market that can be made from the local aspect. Therefore, in order for you to, for Bhutan to develop its secondary market, they need to go global, period, right? And not only do they go global, I think they need to go retail. They got to go from the sort of more institutional investors, which are going to rate these bonds according to that sovereign risk, that liquidity risk, and things like that, and go to a more retail investor. Okay, why do I think that can work? Next slide. Because we are now talking about a new world, okay, where the next generation is coming up. These global millennials, we call them, okay, are digitally enabled, okay? They work off of their iPads and cell phones and things like that. They want to do their banking off their cell phones. Okay? They don't want to go to a bank. Okay? They don't want to open up an OTC trading account, you know, on a stock exchange, whatever. They want to do everything from their phone. Okay. Second, they're socially conscious. Okay. They are very, very conscious about the environment. Okay. They're very conscious about progressive factors. Okay. They're very lifestyle focused. Most importantly, they're crypto native. Okay. There's been lots of studies to show that the millennials are adopting digital assets like no other, and they rather transact in digital assets rather than even fiat. Okay. So now we have a huge base, okay, of potential investors for Bhutan. Okay, these millennials, I'm sure, would be very, very ecstatic to invest into social causes. So therefore, they're not even investing necessarily purely for financial return. They're investing because they feel good about putting their money into social responsibility, good governance, environmental preservation, you know, social economic equality. All these things are what they would invest in. Now, Bhutan's first sovereign bond was 40 million US dollars. Okay, and my understanding is Bhutan plans on issuing $40 million every quarter. So we're talking about a, you know, the future plans of Bhutan are actually, in my opinion, relatively humble. We're just talking about 150, $200 million worth of bonds. Okay, I strongly believe with Bhutan's branding and leadership of happiness, right? If Bhutan also had the motivation to do so, to be able to set the standard for a Bhutan happiness bond principle, and to package these bonds in a way that would be, you know, appealing to these millennials, $40 million issuance globally among millennials which would invest would trump the amount of money that would go into from the institutional side going into these bonds itself. Okay, so that is my strategy, is to go global and go retail, specifically go for the youth who are more socially conscious. Okay, next slide. The other factor I would like to point out is when we digitize bonds, actually you have a lot of innovation with respect to the payment and the settlement optionality. Okay, so for example, in addition to you know, traditional sources of funding through fiat money, right, through SWIFT and the normal channels, you can now have new digital channels to come in, right? You can have, we have regulated stable coins, we call them, basically regulated digital currencies that are private, things like Tether and Circle has their own USDC and DAI. There's some digital versions of stable coins that can be invested. And there's just digital assets, things like Bitcoin or Ethereum, which a lot of millennials and people have. Any of these settlement or payment methodologies should be accepted in the digital form, okay? And likewise, when you settle the bonds, okay, when you make the payments or you settle the bond, you know, principal itself, you can have optionality as well. So instead of the traditional form, you can actually have a digital currency. Maybe it's even Bhutan's digital currency issued, or you can have a stable coin or digital asset issued to a blockchain. Okay, so this new ecosystem is much more expanded than the traditional market, right? Again, we've already established the fact that because of Bhutan's sort of limited geography and its connectivity to the traditional financial ecosystem, by digitizing, by going to this new digital asset world with digital currencies and things like this, you completely bypass the necessity to make institutional connections. You can literally connect your ecosystem wallets of your potential retail customers. Nobody in between. Okay, and so this is a huge innovation space in this regard. Okay? Next slide. And there's established discussions on this. Okay, last year there was some high-level forums that was set, and specifically the Afghani central banker and the Tunisian central banker started talking about Bitcoin bonds. Okay, what does that mean? It means that they will allow the bonds to be paid for by Bitcoin. Okay, there's a lot of money now. Bitcoin now is almost a $500 billion industry. It's almost at record highs, so getting to $20,000 US per Bitcoin, and it's getting institutional. PayPal's offering all of retail customers. Most of the institutional people who had poo-pooed Bitcoin just a number of years before are now all falling into line. As I mentioned before, there's lots of institutional adoption. So there's a lot of investors holding Bitcoin, and there's a lot of investors who would park some of that back into traditional investments like bonds, or perhaps the happiness bond variant because they're more socially conscious. But they need to do so if it's convenient for them. They're not going to go through the standard channels. They're certainly not going to go and open an account through a broker in Bhutan, right? It's very difficult to do that legacy stuff. Okay. But if you give them the optionality to zap some Bitcoin into, the Royal Monetary Authority digital wallet, they will do that in a heartbeat. Okay, so I think that kind of principle can be applied. Next slide. In fact, actually, there was a very interesting announcement a month ago, where basically China Construction Bank, okay, one of the top 4 banks in China, worked with Fusang, which was a new securities exchange, a digital securities exchange. So one of the few in the world in this new, Labuan, special economic zone, got the license to do digital securities, and Fusang partnered with a major Chinese bank to do a $3 billion offering for a new digital bond, and they were going to offer a LIBOR plus 50 basis points. And interestingly enough, the minimum investment was $100 US. Okay, so this applies this fractionalization principle I talked about before, where you can actually much reduce the minimum for a retail investor to come in. Okay, this is hugely announced to great fanfare, and unfortunately it was a little too successful. What happened was the crypto community in the world found this to be a very exciting case. There's a lot of people who would invest in this. And then it was so high profile that China Construction Bank pulled out a few days before the offering because they got some concern from the central government in China, which doesn't really support Bitcoin, doesn't really support unregulated digital assets. Okay, so this particular offering was pulled off. But I use this as an example because it goes to show the potential. Okay, one, up until of a geopolitical consideration, a very conservative Chinese was going to do a $3 billion offer. Okay, number two, they were going to accept in Bitcoin, which was hugely exciting for most of the crypto world. Okay, and this could have happened. Now, the issues that Bhutan has with Bitcoin, I think, are less. Okay, China's worried about capital outflow and money laundering and things like that. So that's why they're not so promoting in Bitcoin. It's a very institutionalized policy. In Bhutan, where I think some of these considerations are less important, and to be able to accept Bitcoin, which I emphasize again, is institutionally accepted by most of the world at this point. There are central banks which are buying Bitcoin right now, right? Pension funds and endowments and all sorts of financial institutions. It's turned the corner from being the black sheep of a digital asset to something that everybody feels like they need exposure to because it has some very interesting characteristics as a digital gold. Okay, that's institutional grade. Okay, so if you applied this principle to allow Bitcoin to also invest into your bond, again, you have a global base, a millennial base, retail base. I think a $40 million offering would be easily subscribed. Okay, next slide. So to tie it all up, I do believe that there's a huge opportunity here. This is a very time-sensitive opportunity. Okay, with the digitization of assets, that wave is coming now. Okay, with green bonds, that wave is coming now. With the leadership of Bhutan already in sustainable thinking, okay, to attempt to do a pilot for the next green bond, sovereign bond offering, to develop an expertise in digital version of sustainable finance, and to some institutional capacity building. Again, I mentioned there's this Sustainable Stock Exchange initiative by the UNCTAD and UNEP, which has a lot of thought leadership in this to be able to help Bhutan get to speed. Next slide. And what I propose, therefore, is Bhutan not even just think about issuing their own sovereign bond, okay, but becoming a point on the map to allow the world to issue their own digital, green, happiness, sustainable, social bonds and other security instruments in the regulatory environment. Okay, we are at a point in the world where there's just right now a handful of locales in the world which allows a regulated digital exchange. Various environments. We got Malta, we got Gibraltar. Okay, we got very small countries. It's bifurcated in two fashions. Okay, we got the Switzerlands and Singapores of the world, the most conservative locales in the world, and they have to do things in a very conservative way. And then we have Malta and Gibraltar and these tiny little countries, Cayman Islands, and some of these small offshores. They're just trying to be economically relevant, and they sort of extend the offer to basically to anybody who wants to come at all. Okay, so there's a lot of, I would say, less rigorous, a lot of scams, a lot of not so good actors going to those places because there's no regulation at all. Okay, I think what Bhutan needs to do is find that harmonious balance point, okay? Where basically you have a regulatory environment that's favorable, but it's enlightened and it's well reasoned and it's robust and it will only accept companies that are actually trying to enforce green bond principles or happiness bond principles, etc. Next slide. And if you create this sandbox, okay, a very enlightened sandbox, you can actually spawn a whole cottage industry coming at a time where there's no other options right now, very few options right now. And then you apply that Bhutan special brand of happiness bond principles in here, you can get a great deal of, I would say, interest, okay, from people who are more SDG conscious, who have the whole roadmap in front of them to come and set up shop in Bhutan. And I'll end on the last slide, okay, which is, I was talking to Dorji, the Royal Bank Stock Exchange chairman, about his interest in creating some sort of green exchange, okay? So I would propose a variant of that, a Bhutan Digital Happiness Exchange, branded where Bhutan can lead the world to happiness through its rigorous, happiness methodology, and really be a point on the map, okay, to leapfrog into the digital world. It really takes, for this to happen, it really would take buy-in from the Royal Bhutanese government, okay, to believe that this is a way, right? But assuming that they want to do it, I think there is no better time. There is such a unique opportunity now in this moment in history, again, with these different trends coming in, where Bhutan can lead not only the digital asset revolution, but also the green, sustainable, social bond, or a social movement, and tie it together with Bhutan's special brand of, happiness methodology, and really lead the world to happiness, right? With that, thank you very much.
Thank you, Michael, for the very, I think, very insightful, your presentation. Normally, I don't want to use the innovation or innovative, right, to the many things. I always try to avoid using innovation or innovative, right? I prefer to use new or different, something like that. But Michael, I want to use the the presentation very innovative, I think, and I learned a lot, the listening to your presentation, right? And before I'm talking about some of my own idea, now we have three, excellent, discussant from the Bhutan. So I would like to invite each one of them, in turn. First, discussant is Mr. Pramod Chetri, the RSEB of Bhutan. I know Pramod, many years by now. So Pramod, you have a floor. The floor is yours.
Hello. Thank you, Masato. Thank you to ESCAP for organizing this meeting as well. It was very insightful. Thank you to Dr. Professor Michael. The whole presentation was, it was thought-provoking for us, because our thought and our discussion from the last 6 months aligns exactly on what you have discussed. What RSEB is discussing with ESCAP and trying to take out as a project is definitely incorporating new technologies, because we have in our experience found out that when technologies we bring in technologies, there is unprecedented changes to the product. So what we decided is that for the bond market especially, and I think Professor was correct, our bond market and the secondary market is very bare minimum. But having said, changes in technology would incite some opportunities out here. So we thought if government bonds can be securitized, so we can tokenize. For example, just to set the concept correct, if the government is issuing around 100 million worth of bonds and the face value is 1,000, we will have 100,000 tokens. And if the interest rate is 7%, these tokens would every day increasing its value. So these tokens will be issued through technology with the wallet system, where these tokens continuously increase their value. So this is how we thought it will be. And then if these tokens are allowed as a medium of exchange, maybe if we can use blockchain technology, and I don't know how we will do that, but if we get support and if we use this, then I think it will just open up the Pandora box, because it will enable the open, instant, and the low-cost movement of money then, because it can be a medium of exchange, and people will be able to send, receive, and spend their money in the domestic market, giving advantageous point for people to also participate in the government bond, and the government could also, with the lower interest, they could, mobilize the domestic fund. However, our thought was always on the domestic level, but if we can achieve this, maybe we can go what the doctor was mentioning on green exchange, having green bonds in the international level. I think that is a sure possibility. And our whole process, we thought these tokens will be accepted by people, because it is backed up by reserve of asset made up of, and people and businesses will have confidence that their tokens can be converted into currency. So what we thought is, what we modeled around this, if somebody has these tokens, they could also, if they really needed a cash, they would go to the bank and then they would convert this into currency as well. So we had thought about all level of secondary utilization of these tokens. And if you have to go international, you have to think in a different line. But that is how we are focusing this bond tokenization. And if we are able to do this, I think there is nothing, the more changes and more adaptation to new technologies will begin. What we felt is, for tokenization, there are two parts always. We can either use the conventional type of system to develop and bring the tokens. However, if we can use blockchain, if we can have our own block, I'm not sure whether it's possible or not, but to have our own blockchain build-up, which might be with a lot of investments requirement, it would be there. But if we have, then we could call it a dragon chain or dragon coin or something that would enable, for fast money. So that is it from our side. This is what we feel Exchange should do, and we are working on this, and we are thankful to ESCAP for supporting this venture together. Thank you.
Thank you, Promon. So second, the discussant is Mr. Karma Yeshe from the Ministry of Economic Affairs. I also know him, quite some time by now. So Karma, you have a floor.
Hello, good afternoon, everyone. Am I audible to everyone? Masato-san, am I audible to you?
Yeah, I think I can hear very well. So
okay.
Please go ahead.
Thank you. Yeah. Thank you, Masato-san, and I would also like to join my, a colleague that we have been provided this platform to at least have a dialogue in adopting new technologies in the financial sector, especially in the capital market. We have, of course, a very active team under the leadership of Mr. Doji Funso in the stock exchange, who are, exploring new technologies to bring the market, especially to make the secondary market dynamic, like our Professor Michael mentioned. So, Professor, coming to your presentation, I think you have covered the historical sort of sequential development of this, financial, market, in the sense that how the traditional trading system or capital market or financial system has gone digital into a demat form, and how it has now come to this, smart contract or the new smart contract concept, digital concept has come in. For us, I think if we really go by the history of our stock exchange, in terms of into the first round of digitalization or bringing the exchange trading system somewhere between 2011-12 with the adoption of Financial Services Act, the amended version of Financial Services Act, of course. So looking at that, we also, I think, looking into investor protection concerns and about giving the required. I think there was one slide in your presentation where you were talking about bringing in enabling regulatory framework for any innovation to come into the market. So we have also, we went through amendment of Companies Act somewhere in 2016 towards the second half. All this, I think we have, if we look at the market progression or development or evolution over time, we have fairly been, I think, at least in our region, I would say SAARC region, we have been fairly new entrant in the digital or dematerialization process, but we have been quite fast in adoption of new technologies and in the market. Going by that, now just to give my thought on tokenization of bond and adoption of smart contracts to basically facilitate settlement in the digital world, to basically tap into the industrial 4.0. I think there is a need for us, I think, in the government as well as in the financial sector, all the players, all the including stock exchange, Ministry of Finance, Central Bank, and Ministry of Economic Affairs being one of the stakeholders in the regulatory setup. I think there is a need for us to basically work together in the sense that we have to, I think, have more such dialogue to basically include some more. I thought today's two presentations from Professor Michael was very enlightening in the sense that we were introduced to the concept with a very in-depth, deliberation. And I was thinking, we might have missed some of our senior colleagues who could have been very much, exposed to this presentation. So I was thinking maybe this would be my request to ESCAP and UNESCAP and Stock Exchange to maybe include senior level dignitaries in the next next dialogue, if we could have one. Them understand that this technology has a huge potential and it has come as a solution for us to activate the not so active secondary market of our stock exchange. So my thinking is, one is that we have to include some more people, more decision makers to have exposure to this concept, and be welcoming that way to adopt new regulatory frameworks. We are currently looking at the central bank, Ministry of Economic Affairs and the Stock Exchange. We are looking at revising or reforming some of our capital market related regulations to enable revival of our secondary market, or to make it more, not really revival, but to make it more dynamic. So my thinking is we have to be, we have to grow together. We have to enlighten each other more and expose some of our, bosses into this concept. The other thing is that I got from, while looking at this presentation is when we look at adoption of any technology in Bhutan, we started this process of digitalization of, for example, government to citizen services fairly new. I mean, it's just been about half a decade, I think about 5-6 years ago. And it has been found that initially it was ineffective in the sense that we went, big bang. We adopted we wanted to bring every single public service delivery under a digital platform. But because we had this, insufficient, I would say, knowledge or exposure in some sectors, we have not been able to, go full on digital in that area. So that way, my thinking is there is a need for gradual. I think some of our previous speaker or discussants also mentioned that there is a lack of financial literacy, even among the educated lot. So when you are talking about literacy, financial plus digital, I think we need some more discussion and exposure for even the policymakers to adopt, because we are the proposal mentioned by Professor Michael is that we want to, I think the proposal is to bring the sovereign bond into the digital world, to be transacted and to be participated by the new millennials, at retail level, transaction. So I'm very excited about all this new development, but at the same time, just to throw in a small pessimistic kind of a thought is that when we are bringing in new technologies, new initiatives, I think we have to study the relevant stakeholders' level of understanding of this new concepts, technology. And definitely, I think in terms of the initiative taken by our regulators like central bank, it is good that there is this at least it's beginning with recent sandboxing sort of regulatory licensing given to Bitcoin mining and things like that. So this blockchain technology is one thing which has grabbed the attention of the highest office in the country. So there is a willingness to learn, but the process, my thinking is that we may have to be more inclusive of high level policymakers, and as long as we go together, I don't see why we cannot achieve it. And there is a huge potential, like Professor mentioned, because of our natural barriers. I think the only digital space is our new or alternate opportunity for us to explore. Thank you. That's my thought, Masato-san.
Thank you, Karma, for your, and others, your suggestion to reaching out to the senior officials, for the decision maker. Thank you so much. And now, we have a last discussion, but not least, Madam Tserin Zhang from the RMA of the Bhutan. So, floor is yours, Madam.
Okay, thank you. Am I audible?
Yes, yes.
Okay,
very clearly.
Okay. Thank you, Mr. Masito and UNESCO for the opportunity. And also thank you, Mr. Michael, for the excellent and insightful sessions, especially with regard to the types of bonds that Bhutan can issue. So to be frank, like as Karma Ishe mentioned, the regulatory framework around securities issuance has not evolved to the pace to match the rapid advance of technology. But however, like RMA as a regulator and the central bank has come up with a regulatory sandbox, which basically which the objective is basically to test the idea in a controlled manner and to assess the risks and reward associated with the new innovations. As I told before, like our regulatory framework is not that much comprehensive. We need to like review those regulations and make some amendment, especially like the current regulations require physical representations of every issued securities to be held by a designated custodian, or it has to go through a broker. So all this has to be amended regulation. And we should be also concerned about the investor protection, especially with regard to the new innovation using digital technology. We need to be aware of the cyber security and all, and how those tokens can be converted and accepted by the, as a medium of exchange. So like I said before, like if this idea is very good and excellent, and we should embrace it, but however we should be mindful of all those risks and rewards associated with it. So therefore, like if this idea is very good for Bhutan, so if the RSCBL or any other innovators want to go ahead with this idea, so RMA has instituted a regulatory sandbox, so they can participate in that sandbox. We'll test those ideas together, and if there is a need to review or amend or come up with another new regulation, we can do that. So what I want to what I would like to suggest is like you want to, like if this idea goes forward, we would want RSC bill to to apply to the regulatory sandbox, so they can test idea, and together we can like make a uniform and more like innovate to make it work in a controlled way. That's it, Mr. Masato. Hope it is helpful to you.
Yeah, definitely. Thank you for your madam, your comment. Yeah, thank you so much, madam. And the Michael, you have some quick response to the three distinct discussions now. If you have any point you want to share with them, please share.
Sure.
Or
yeah. Let me address a few of these points. Yeah. So in talking to Mr. George about his thoughts on how to digitize these bonds and create a medium of exchange. That's something that we had discussed before in our last conversation. Certainly very innovative. I would say that that's even more innovative than some of the things that we discussed today, because that medium of exchange is actually quite interesting. When you're talking about a medium of exchange, you need it to have some sort of stability and value, right? That otherwise, if the value changes and people don't know how to use it, it is not equivalent to a currency which has a stable, relatively stable value. So I think that's something that would be very, very interesting to figure out how to actually have that sort of increasing value of the token, but then when you need to convert it into a stable value of what we call a measure unit of account, right? That people can actually use as a yardstick to actually be able to transact value. So I think that the nuance there, I think technically you can definitely do it. And it's a question of whether or not it will be practical in its use form without that unit of accounts sort of standard, right? So I look very much forward to working with the chairman in iterating on that idea and seeing if there's ways that we can optimize it to be actually implemented, right? With regard to some of the other questions, the opportunity to elevate this discussion. I truly believe, I'm a professor, but as an academic, I'm actually on the applied side, meaning these are not just, head in the cloud, abstract ideas that, would make sense for academic paper, but not be reduced to reality. The things I've discussed today across the board are ones that actually I feel that can be implemented, okay, and to success. Right, and certainly there are a lot of challenges with education, with some of the regulatory aspects, and this is why I think that elevating the discussion to leadership in the regulatory organizations is an absolutely critical next step to get their buy-in. But I can say that if they had, I actually sit on different sort of think tanks at the national level, working with the regulatory body. So I work with quite a few, and I can say that there is more conservative, sort of slants, and there's more progressive ones, right? And I say that if we can get the right progressive thinking behind this, we can have the best of both worlds. Obviously, we care about investor protection. We care about, all the things that the regulators care about as well. But again, I think there's a happy medium in there where we can address those concerns, and we can still put the sandboxes in and the nice, warm regulatory environment in, so that we can attract innovation into the country, right? And I think that's a goal that's worth looking at. And there are some standards about this. I've been studying what's happening in Switzerland and Singapore and Hong Kong. As an example, Hong Kong just in the last month or so, Ashley Alder, who was the head of their regulatory commission, basically made it so that any previously unregulated digital asset exchanges now had to go through the regulation. And what he did when that happened was just basically push all that innovation out of Hong Kong into Singapore. And Singapore, I think, would be one of those that actually have walked this tightrope very well. Okay, Singapore, being a very conservative financial institution, clearly cares about investor protection, things like that. But they've managed to set the bar just right, where they are inviting to innovation. They have the sandboxes in so they don't stifle it. They have a sort of a evolving optimization thing where they wait and see, and the players perform, and then they adjust policy instead of just heavy-handedly determining policy from the front where they don't know. So I think that process would probably do well in Bhutan. Again, I feel that Bhutan has a very unique opportunity here. Lacking in the typical economic drivers means that Bhutan should be open to the possibilities of latching onto the digital economy. And again, I think there are some well-reasoned standards in there where we can actually have Bhutan latch onto this brave new world and reap the benefits of being a front runner in that world.
Thank you, Michael. And now, we have received a couple, the questions, and also requests for the speak. And now we are behind our schedule, about 15 minutes. But please, allow us to stay a bit more, and to taking some questions before closing. So, Michael, can you see some of those questions I put on the screen?
Yes.
We got the 3 questions. Right, two people, right? So could you please, Michael, quickly respond some of them? Maybe not all, but some of them.
I see some bullet points. Let me see.
Yeah, you see that?
Yeah, let me just read it.
And also one more.
Okay, yeah.
Yeah, and this one. This is the final one.
Okay, so I think there's some pretty technical questions. Let me look at that the second one, right? So, yeah, so this is very interesting. I was actually looking at the question really is you know, this peg to the Indian rupee, right? And you know, my understanding is that there's actually quite significant capital controls. If you're looking at the history of it, anytime actually there's foreign direct investment into the country, you know, for example, because of the you know, hydroelectric power and things like that, causes this outflow of capital for imports and things like this, and then there's a lot of these capital controls that need to come in place. I think there's a couple concepts that could be brought to bear, right? One is, you know, when we're discussing a digital form of the currency, okay, we have the option to actually, you know, be quite innovative. This hasn't really been implemented in a lot of places, but you know, there's full programmability in that currency. So it doesn't just have to be a bearer instrument type, you know, currency where, you know, you have to have unrestricted, you know, sort of ability for it to transfer and to do whatever. In which case you have no, but you can program in an arbitrarily complex rule about where that fund goes. And the other benefit really is again, from a policy side, those funds and those flows can now be tracked because they're in a digital form. And before they are, it's hard, right? You can only have very, you know, I would say, broad strokes in terms of where the money goes and how it flows, right? So one is by digitizing the currency, you can actually start to be able to track and trace exactly where the money goes at a much finer resolution. Two is based off of that big data and off of that knowledge, you can now start to construct policy that can you know, direct the money or incentivize the money to go in the right way. And so I would say that those tools are yet to be explored, but it's one mechanism by which you can kind of exert a more finer grained resolution on both the monetary and fiscal policy of the country. I firmly believe that regardless of whether or not Bhutan is pegged to the Indian rupee, which, you know, it makes sense if, you know, something, I forget the number, but it was a big fraction of the you know, economic export and import into Bhutan are from the Indian market. So that makes sense that there's a tight economic coupling vis-a-vis the currency, right? But regardless of whether that peg it makes sense, let's just take it as a given, because I think removing it from the peg is a more involved discussion. But assuming that you have the peg, digitizing the currency to allow more effective transmission of monetary policy, more, you know, I read somewhere also, increase the velocity of that of the money to be able to increase the turnover and the use of that money, because there's less frictions of the use of that money. Also to be able to transmit that money to where you need it. Again, you can give every citizen a digital wallet and literally zap money to whoever you want for whatever reason that you dictate. Those benefits by itself should make it a no-brainer for Bhutan to consider. I think something right now, it is a little bit new. But if you're looking 3 to 5 year horizon, I'm going to make a prediction that the whole world's going to move this direction. There is no reason to stay with the old system when there's so many useful benefits of the new system. And importantly, many of the world's economies, which includes the United States, which includes Europe, which includes most of the large economies of the world, will have their own digital currencies. And when that happens, I think Bhutan would benefit to be able to join the sort of the international financial ecosystem more effectively through these new means, you know, directly rather than use the traditional, you know, sort of system. Yeah.
Okay, thank you, Michael. Yes, sorry, I also want to invite one more, the person to, commenter, because I received the request a long time. So, Yeshi, then, Yeshi, you still there? Floor is yours.
Yes.
Finally.
Yes. Yes. Good afternoon, and thank you for the opportunity. Firstly, on the bond tokenization, as per my understanding, it is actually not a new concept. Bond tokenization. Actually, it has been taken care in the Royal Security Action long time back. So it is kind of trendy language for my understanding. Its bond tokenization is actually the securities where it's taken the record in the electronics form and all those things. So, and the only thing difference is we could say is like already explained by Professor. I think like a digitization and transaction, like a trading and clearance and settlement. This is the only major thing, like from the distributed ledger technology like DLT, commonly known as DLT, to the DLT, which is known as like a bond, not a bond, I mean the blockchain. So commonly known as blockchain, and then that's what is split into a small unit based on the individual capacity and all. So that's what I feel it. But now in order to move forward, like as advised by the professor and from the ESCAP, like this key player like a Royal Security Exchange, then the RMA, the Minister of Finance, the Economic Affairs, are we ready to go forward? That's what, are we ready to that? That is what we need to think about a lot. And if it want to go about, then everyone key player has to move at the same pace, not only the Royal Security Exchange only, leaving behind the Minister of Finance, leaving behind the central bank, all those things. That's what I feel. Then other thing is in the previous presentation, like digitization in these things, like it will be going to help in terms of cross-border trading, especially in the transaction and all those things. So when that is in that case, so will there be no any involvement of any like currency risks? Like in the physical case, there is a currency risks or exchange rate risks. So when we are having an international and when there's a outflow, so there will be some inflow and outflow of the these things in the digital transaction. Will any risks involved? So if that is not involved, then definitely it is a kind of eye-opening kind of suggestion for the Bhutan. I mean, especially for the Minister of Finance and Central Bank, where we are having an issue with the huge current account deficit and the running of fiscal deficit. So that definitely it will be going to ease on that thing. So in that case, I would like to especially hear on this. This that will be going to help, moreover, going to help in terms in order to have our independent monetary policy as well. So I want to listen on this, like in the capital, in terms of digital inflows and explore risk involvement, all those things. Thank you.
Okay.
Michael, yeah.
Sure. I would. Okay, so I can answer this question this way, right? So obviously, and I alluded to in what I just said before, that there is some capital controls in place because of the concerns related to these inflows and outflows and causing sort of destabilizing effects, right? Clearly, when we're talking about the currency, at the high level, the capital accounts, this is a primary consideration for the Royal Monetary Authority and central banks around the world. So certainly, I would say that there would be an effect, right? And so therefore, this is something that needs to be, properly studied, right? But that being said, I think in general, right, we would want to have a more, in general, a more efficient mechanism to be able to do to be able to allow inflows and outflows. And we also would love to be able to have data analytic techniques to be able to analyze them and then make the proper analysis. Whereas right now, it's very hard to do so. So I think overall, those considerations exist, whether it's digital form or not. or traditional form or new form. But I think the new form gives you more, you know, bells and whistles, new tools, both for the fiscal and monetary policy and for data analysis that will allow you to do a more reasonable thing. That's one answer. The other answer is actually in considering Bhutan's situation, another way of doing it, okay, is to leave the digital, the currency side intact, right? To really basically sidestep the issue, whether to peg it or whether to digitize it and create your own CBDC and things like this, which I understand could be a larger, you know, conceptual gap to jump over, you know, for regulators. We can also essentially or essentially a side currency that's used as a medium of exchange, which doesn't disrupt the capital accounts and things like that. That's one area of exploration. So, for example, if we, you know, one form of that would be the sort of the happiness token, right? The tokenization of happiness as a commodity, right? If you went and created another, you know, essentially digital asset, okay, which could, you know, accrue real economic value, you know, and also be directed through different sort of policy to enable people to move happiness in the right direction, and those credits can actually have economic value, and then those credits can have some sort of exchange rates back into the local currency or internationally. You have actually a decoupled scenario where you can actually leverage the benefits of these digital currencies, but yet still maintain a more traditional control over the overall currency itself, right? So there actually that's one area of exploration that would be very interesting to explore. You know, there's been some thought put into it. Actually, with regard to the happiness, you know, stuff, you know, we actually have partners that have looked at Bhutan's situation and have really rough, anyway, done rough simulations of how this would play out. So it's not like we have just an empty idea here. We actually have some, I would say, meat on the bone in terms of substance, in terms of being able to create simulations, being able to get into the detail of the economic drivers and then create a economic system that actually makes sense, right? And so what I would propose, just to maybe end up, is this is something that Masato-san and Tientip and us discussed, is sort of like we actually have maybe the motivation post this webinar to really look at the downstream or look at the next steps, right? So I really encourage, based off this conversation, that one, we take the suggestion from before that we rope in the decision makers and the stakeholders across these regulatory, you know, regimes, and two, we hold essentially follow-on workshops. Okay, maybe one for the digital ones, you know, having of the green bonds, the digital things, and one for maybe this happiness tokenization. And we can get those stakeholders to come in and understand the concept and give their feedback, and then really iterate and brainstorm about the considerations, constraints, concerns, and opportunities. And from there, actually get to a point where we can maybe even create a roadmap and a way to design a pilot or a test bed to really move the ball forward. So I think this is something that'd be very interesting working with the ESCAP to move the ball down the field.
Thank you, Michael, for your the personal suggestion to us, ESCAP as well. Before closing this session, does anybody has any pressing issue? Very quickly, concisely, if you have anything you want to share, question, anything. So I see none. So now I want to declare to close, this session and hand over to the floor to the Kun Boon. So, the Kun Boon, the floor is yours.
Okay, thank you, Masato, as well as Professor Barbara for moderating of both sessions. And thank you so very much for Professor Dr. Michael Sung, speaker of both sessions. We hope participants today will more or less learn and enhance knowledge on digital finance. We've come now to the closing session. I would like to welcome again Dorjit Phuncho, CEO of the RSEB, to deliver the closing remarks. So Dorjit.
Thank you, Kunpachara. What an exciting. Before I end my go to my closing remarks, I'd like to believe that perhaps one of the best outcome of the 20th century globalization was the internet and the knowledge transfer, which has paved its way for digitalization. Any disruption caused by the advent of new technologies should benefit the entire humankind. Similarly, in our case, given the size and peculiar nature of our economy, I feel we don't have a choice but to leverage on the incoming technology. So the question that we all need to ask to ourselves is that, are we ready to reap the fintech dividend? Do we have a conducive environment to take advantage of the emergence of fintech in Bhutan? Listening to Professor Michael, I see that we have a huge scope, and with the right prescription and riding on our brand as Bhutan, I believe that we could take advantage of the global trend. And also, as mentioned, the benefits and opportunity of fintech products should obviously be reaped by the end users. By and large, as suggested, again, we need to appeal to the millennials and Generation Z who are techno-savvy, which perfectly aligns to their comfort zone. Well, in terms of access, I believe that with over 90% of mobile penetration and internet services, we have the potential to leapfrog in economic dynamics using fintech advancement, provided we meet our conditions. Apart from our primary role as stock exchange to provide an efficient platform to raise cheaper funds and support the expansion of public and private sector, in our context, the stock market should also stabilize the stress on the financial sector by matching the long-term investments to long-term capital. And as Bhutan prepares to graduate from least developed to middle income country in next few years, as highlighted, again mentioned time and again, access to concessional funds will be limited, and the role of stock market and capital market in general will become even more prominent as a platform for government and private sector to raise funds to finance developmental activities. Well, in our session, I think there are a lot of talks on capital outflow and on the currency regime. Yes, we have limited resources in terms of foreign reserves, but how long can Bhutan, position ourselves in? If we want to grow any economy for that matter, I feel that there has to be injection of funds from outside, but how we use this fund to add value in the economy, I guess that is the trick. And obviously, I think we should address this issue as because I think we are not insulated when the world is changing around us. Well, technological advancement and financial innovation that we discussed today would be a key in delivering our aspiration as well. Well, as RSCB, we are committed to play an important role in the process of financial and economic transformation of a country. But again, without a conducive environment and support for capital market development as an important identified institution, it would be difficult for us alone to take it forward. Considering the predicament, I would like to inform again that we have already started sensitizing our policymakers, including members of the parliament and other important stakeholders, on the importance of developing our capital market and as well as taking forward as we digitize. And we hope, strongly hope, and we sincerely hope that it will be considered favorably while in their policy decisions. Well, before I close my remarks, on behalf of RSEB, I would like to thank the ESCAP team led by Dr. Tintip, Chief of Financing for Development, Dr. Masato Abe, Economic Affairs Officer, and Kun Pachara for all the assistance in hosting today's virtual conference. I would also like to thank our lead consultant, Professor Michael, Associate Professor of Finance at School of Finance and the co-director of the FISF FinTech Research Center. Whatever you have shared with us today, we look forward on to how we can incorporate some of the ideas and concepts that you have shared when we develop a green exchange platform based on values of GNH and UN SDG goals. For us, UN ESCAP is an important development partner. Besides its engagement in supporting Bhutan prepare for graduation from LDC status and formulate strategy for resource mobilization to narrow down socioeconomic gaps and address the SDGs, UN ESCAP's support to the capital market through its technical assistance for the issuance of first sovereign bond this year are among the few notable mentions of ESCAP's assistance to Bhutan. And we are glad to continue our partnership with UN ESCAP as we venture into digitization of Bhutanese capital market. And we also look forward to UN ESCAP's support towards promotion of technology and innovation in our financial market as we move forward. Finally, I would like to express our gratitude to all the speakers and participants for your valuable inputs and taking out time to attend this, again, important conference. It's been a very great pleasure. Thank you very much. Over to you, Umpachara.
Thank you, Dorji, for very comprehensive closing remarks. I would now like to invite Dr. Tintip to deliver your closing remarks. Dr. Tintip, please.
Okay, thank you very much. Okay. Thank you very much, Pachara, for your organization of this event, and thank you very much, Dorji, for your last inspiring speech at the closing. So I'm really happy that we organized this important conference at this critical juncture of COVID-19 pandemic. I really believe that it has been a very fruitful 3 hours, actually now 3.5 hours, but it feels like it's not that long. And that we spent together this afternoon, I believe it's a very fruitful and bring a lot of insights and, looking forward into the future about what we can do together. We have heard also several various aspects of digital finance transformation and good ideas on digitalization of the capital markets. Along with policymakers, experts, and key stakeholders, we have highlighted how Bhutan can go through digital finance transformation during this unprecedented time. And today, I actually hear a very key word that can summarize it into, right, in all the problems lies and opportunities ahead. And I think this COVID-19 actually brought us together to explore digital finance transformation, both opportunities and challenges, and how we can work together to achieve that. Today's interactive dialogue have also examined key challenges and opportunities for Bhutan's efforts towards digitalization and especially of its capital market, including discussion on the possible roadmap for bond tokenization, green exchange, happiness exchange. Our interactions with experts have not only enhanced knowledge and ideas among participants, but also emphasizing the importance of multi-stakeholder cooperation for pursuing financial inclusion and sustainability for all. Like you, Bhutan cannot do it alone, and ESCAP also will not do it alone, but we'll be doing things together with member states, and you will always be on the driver's seat of this development going forward. It is clear to me that there's a lot remains to be done, and there's of course some questions and challenges remain ahead, and we must work harder to develop an enabling financing and digital environment to attain a sustainable development in Bhutan, given at this critical juncture of COVID-19 pandemic and Bhutan imminent graduation from LDC status. So in this context, I'd like to confirm that ESCAP stands ready to be Bhutan's partner and in providing any technical assistance that you need to build back better for a resilient and digitized future. We sincerely hope that in the near future, we could support Bhutan in leapfrogging into some of the aspects discussed here today, whether that being improving on digital finance infrastructure or introducing digital green bonds, green exchange, digital happiness bond, and all those exciting concepts that we hear today. And last but not least, I really would like to thank again the Royal Government of Bhutan, Royal Security Exchange of Bhutan, Royal Monetary Authority of Bhutan, and especially Doji for strong support in making this event such a great success. I also would like to thank my team for making this event happen, and my sincere appreciation to all experts, Barbara, Michael, who joined us today, as well as the participants who kindly share their time and insights with us. I really look forward to continuously working with Bhutan to help you leapfrog developed world to transform the future development by being a first mover to adopt the latest digital economy technologies. And most importantly, we really hope that we'll see you again soon. Thank you. Over to you, Pachara.
Thank you, Dr. Tetif, for the closing remarks. Once again, thank you for all for taking part in today's meeting. And you can visit our event website for the meeting material and the video recording for today's meeting. Meanwhile, we greatly appreciate your feedback of the meeting to help you and ESCAP to improve on organizing the meeting in the future. I already sent an email with the link to do the survey. Please help complete the survey, which should take only a few minutes of your time. I also would like to thank again Dr. Puncho, the CEO, Sonam Lajel, and colleagues at the RSEB for their support and coordination for today's meeting. Today is already the 9th of December 2020, the year that we will be remember due to the COVID-19. And December is the last month of the year, the festive season. So I wish you and family happy, and most importantly, please stay healthy and stay safe. Lechum Day. Until we meet again next time. Thank you very much and goodbye. ขอบคุณค่ะ Bye bye.
Thank you.
Bye. Thank you. Everyone.
Bye.
Thank you.
Bye bye.
Bye.
Yes, thank you. Bye bye.
Thank you. Bye bye.
Bye bye.